It's Thursday, 26th of June, and we are joined by the indelible Luke Mini Cooper.
Thank you very much for having me.
Thank you so much for joining us on this morning. How have you been? I feel like we haven't crossed paths for a while.
Yeah, I think last time I was on the show, it would have been 2 weeks ago on the Friday.
Yeah.
So I often do a Friday shift because I love a Friday shift on the TV. And then today I'm doing Wednesday because I believe you're already booked up for the Friday, right?
We are booked up with Eggnog, who is coming online.
Eggnog, is that what you call him now?
Yeah, because we had that Christmas quiz, remember?
Yes,
and he was Ronnie Eggnog. And I was and Ong Number.
I call him Ron. Ron for short. Ron or Ronnie?
Ron or Ronnie.
Ron Dog's another one, actually.
Ron Dog's is good.
You don't like that one, though.
Ron Dog. Good morning to all you viewers there. I'm going to call out the first few ones and pass it over to Mini Cooper. Julian, good morning. Let's try and sort something out on Friday. Maturin, talking about Andrew McKelvey there, rolling back the years, one that's simply red. Maturin, Slash is still playing. I saw him last year in Hyde Park. Are you talking about Guns N' Roses there? I assume he's talking about Guns N' Roses. And Gavin Ackers replying to that. Boise, well, morning to you as well. Take it from there. Luke, Monkey Man.
So we've got Monkey Man, we've got Maturin, Andrew McKelvey, Jesse 14.
Hey, Jesse.
Parky 1977 saying Rocket Ronnie. That's another one. I like that one.
Another one. But I do like the Ron Dog.
Ron Dog, yeah.
That's pretty cool. Jesse 14, I have news for you. I was told by our IG post room that that IG mug that I was sending you was going to cost some £70. So I've sent you something else instead because they have a cap. But something else is coming towards you, just in case you're wondering why it isn't there yet. So, lots coming up. Shall we go to coming up, or shall we summarize the markets first?
Let's have a look at what's coming up.
Yeah, let's have a look. Producer Phil is on the beach in Malaga.
Oh, nice.
And Rich is in Milan.
Very nice.
Yeah?
Yeah,
very nice.
isn't it?
Yeah, but well deserved because they had the Milan events on Monday, which was very well attended, and also that followed the Friday event in London as well. I was there meeting loads of our Trade Live with IG clients there. Thank you so much for coming and braving the heat. So I'm going to tell you the coming up because Phil's not here for that graphic, but coming up we've got myself and Luke to take you through the opening bell and also fast markets. Then we will have another Luke Moore and Chris Beecham, whom I call Beachy Head. They'll be coming to take you through all the macro, all the other big stories that are moving the markets, also throwing forward to some of the big numbers that we have today, like GDP and also durable goods. And then a little later on, we will also have Rich speaking to, I think it's Philly, and Gabriel Nussbaum on investing experiences, for those of you that haven't watched that show. And then finally, I'm hearing from the gallery, we have Talking Shop. Now, for those of you that haven't seen Talking Shop, I really highly recommend you watch it. I have watched it and got so much out of it. This is the one that Luke and Ronnie did, and it's about how to utilize AI in your everyday trading to make your trading more efficient, how to get it to scrape, what the differences are between Claude and Perplexity and ChatGPT. Do you use AI?
I use AI. I use it to write emails sometimes.
Oh, interesting.
Yeah. So as an example, we host workshops here
Yes.
at IG, like premium workshops, to help promote that internally and to my clients. I often use AI to actually prepare an email. But I always write, don't make it look like AI.
Oh, does that work?
Yeah, it does work. And always say please as well.
Right. For those of you just joining, Jugga, good morning to you all the way in Germany, away from numbers. Neil, good morning. So amazing to see you last Friday. It was so good to meet you in transit again. You're on the naughty step today, not Kate Murphy. Maybe Kate Murphy might be on the naughty step. She's not here yet, is she? Maturin saying, hi everyone. Now have 57 trader friends on Discord group. Early days yet, but we're sharing trade ideas, strategies, news, education, and recommendations.
How many subscribers are we on now?
We are. Yesterday when I left, it was 1,091. Today, this morning,
Yeah.
it is 1,110. Take a look. Woo! That was wonderful, amazing. And this time last week.
4 weeks ago, it was 600.
I know. And then this time last week, we weren't in at 1,000 yet, because I remember I was on air with Dylan when we hit that 1,000 mark, and then we suddenly had to like interrupt, the programming and put the chart up with, fireworks and everything. And then poor Dylan, it always happens on his segment. He's like, "What's happening now?" We've done a switcheroo as well on Dylan's segment where Rich and I suddenly swap places.
Oh,
just
nice.
to catch him out. And so, yeah, that's...
Or Dylan.
We're Dylan. Talking shop, yeah, Gavin joining the fray there is fab. I've started structuring my questions for each model to get the best results. And for those of you that also love seeing the behind the scenes, do go to my Twitter, because I'm going to whack that up for you. You can see here how structured you can be with AI. And that is myself and Luke stress testing Claude. And he was laughing because I gave it such a detailed question that I broke it. It looks like Ange has broken Claude. It literally had, I think they call it hallucinations. And so it was trying to create what I was asking, but some script overlap.
AI.
Some script. I had to like re-ask it many times and simplify it, almost like talking to a child. No, this is not exactly what I was asking
Did
for.
you say please?
Are you meant to say please?
Of course you say please. They're gonna take over the world, AI. They'll remember if you don't say please.
So I have to be polite now.
Yeah.
Okay. Hopefully the AI will also know that I invest in NVIDIA. So perhaps then they might not, get
go
rid of
easy
me.
on you.
Yeah, they'll go easy on me. They'll go easy on me. Right. Speaking of going easy, let's get straight to overnight news, shall we?
Cool. Let's go.
Hey, trader friends, welcome back to the show. And we are going to take you through some of the top stories that you might have missed overnight. So just bring up my screen there first and taking a look first at CNBC, because we are looking at this first. European markets, we're just about 30 minutes to 8 o'clock right now. And we are still looking like markets are shrugging off.
Yeah.
Right? Yeah. This ceasefire looks like they are suggesting, markets are suggesting at least, that all this is going to be contained.
Yeah,
and the ceasefire, fragile.
Yeah, I mean, you can see that literally with the price of oil, because when there's a lot of geopolitical tension, oil, of course, is a big mover. And on Monday, we saw the oil price shoot up. And then from Tuesday, it's come back down. And it's remained around the same level. I know.
And what's also fascinating is that we also saw, if you come off my chart for a second, guys, we also saw that in the commodity space, it wasn't just oil, but gold. I mean, it's up a bit now, but it did come off the last 3 sessions, right? And so I'm going to zoom in for you. And at the same time, look at the markets. In terms of the indices, Wall Street, also here in the UK and Europe as well, we have seen a huge amount of just still risk on. Do you think we're going to get to a sense that we are going to have, everything is back to normal? We're going to climb and scale those highs again?
I think so, yeah, because from what it seems like is Iran told the US that they were going to attack their military base in Qatar, and I also believe that they attacked somewhere else. However, they informed the US beforehand that they were going to do it, so therefore no lives were lost, and all the missiles were intercepted. So really, it's not really a strong response.
No. And what's most interesting too, just telling our trader friends, is to Mini Cooper's hit the nail on the head. always trade trade on the fact, especially right now. And for those of you watching this space, you know, what I found most telling is that Qatar closed its airspace, and the US did tell you know, US and UK citizens to shelter, right? But its airspace was reopened very swiftly after that. The other one with oil as well. Let's have a closer look at oil.
Because the Strait of Hormuz, 20% of the oil supply goes through that every day, and Iran, if they wanted to, could block that off potentially. I believe at its narrowest point, the Strait of Hormuz is 21 miles. And of course, if they did that, that would have a huge impact on oil supply. And what would happen is we would see the oil prices go up if that was to happen. But so far, it seems like nothing's really going to escalate. If Iran hadn't done anything at all, then it would make them look really, really weak, which is, of course, they wouldn't want. So fingers crossed it's all over and no more lives will be lost.
Yeah. So that's right. Those of you that saw Dylan and I talking about oil, and Dylan called a short there. For those of you that did go short, well done you, because this is what we were looking at. So I'm going to pull my screen over, and you heard me talk about this yesterday, and I put it on the chat as well. I want to say, look at the facts. So have you used marine traffic, Mini Cooper?
No, I just use Google Maps.
Marine traffic is a really cool site, and when things go off in the Middle East, it's a bit like air traffic control, but this is for shipping. And so when you go on the site, you can just do, I mean, it's very easy if you're just searching this at home, marine traffic, boom, it's the top one there. And the bits in grey, obviously, is the country. Bring it right down to where we need to look at, and that would be the Straits of Hormuz. There you go. And as you can tell, I was checking in on this when things started kicking off on Friday the 13th, on June the 13th. And guess what? I'm going to zoom in if you can't see there. Still chocker there, as you can see. And until we see issues, until we see lots of arrows of ships heading the other direction, you know, all things, it's business as usual, right? All things remain.
I personally think it will continue to go that way.
Yeah.
I mean, imagine if the prices of oil just jumped like 20-30%. There'd be huge inflation, which would go along with that as well, of course.
Yeah, they would be. So any of you trader friends that use these, I love a map. I have to admit, I love a map. During COVID and also during, you know, when the news was starting to come out about Wuhan and everything, I was madly every day checking the, you know, the flight.
I didn't even know about this. I know about the flight one.
Yeah. So now you know a new one, marine traffic. Bloomberg have their own version, for those of you that have Bloomberg terminals, where it's even more granular. If you click on the arrows, it tells you what's on the ship. And what we used to love playing at Bloomberg is that some ships do not have any data on the cargo.
So what does that mean?
It means that it's top secret.
Top secret.
Or like some, you know, some Emirati.
I thought they just make it up instead.
Ferrari.
I thought they make it up instead of saying there's nothing.
No, apparently they have to, there's some sort of clause or some sort of special treatment if it's not actually disclosed.
Okay.
Yeah, so we used to play, you know, games. What do you think was that one? Well, it's headed this way, isn't it? Yeah, good morning. Lots of you joining the show. If you are just looking at this without the top line, because I've been told F11 to zoom in for you. It's marine traffic. Marine traffic. So marine traffic is where you look to figure out whether or not anything's up in the Straits of Hormuz. Right, elsewhere, let's have a look at some other big news as well. Come off my
Should we talk about Shell and BP?
Yes, definitely. Let's have a look at Shell and BP.
Let's have a look. So this was announced as around 4:35 yesterday, after the UK market closed. Now, of course, we've got the London lines, obviously, of Shell and BP, but we also have the ADR, so the American Depository Receipt. and you can see on the price charts at around 435, you can see the huge movements. The story was Shell in early talks to buy BP. This was from a Wall Street Journal report, okay? But then it was later by Shell came out and they said no talks at all.
They would say that. And, you know, in the city, how many times have we seen this when they come out and say no comment or, you know, no talks or,
They came out and said this. A Shell spokesperson said, "This is further market speculation. No talks are taking place."
Yeah, still it managed to move BP's.
Yeah, BP shot up and Shell shot down. Is that okay if we bring up the price chart?
Yes.
We did see a big movement.
Here we are. I'm just going to come off my chart very quickly.
Both huge companies.
Trader friends, we need a poll to get Ange more screens because I'm used to wrap around 4 screens at Bloomberg. Here I'm having to maneuver 1 screen, and I'm sure Rich would also love 4 wraparound screens for us here. So let's have a look at BP first, shall we?
Yeah, because BP has a market cap of 60 billion, and then Shell of 153 billion pounds.
Right, so let's have a look at that. BP.
Then we need the ADR line.
Yeah. There we are.
Yep.
Yeah, so there we go. You can see, let's just do the 1 hour chart. So that might give you, there we go. So quite a reaction there. And then let's have a look at Shell now, the ADR.
Opposite way.
Yeah, here we are. Voila. So that was a reaction there. I'm on the blast from the PCMs.
Yeah.
So immediately I called up some friends in Southeast Asia going, hey, have you guys heard anything about, you know, BP? Because BP has trader friends. If you trade the space, they have been aggressively moving a lot of their functions that they can move to cheaper geographies, to places like Pune in India, and also to KL in Malaysia, and also to parts of Indonesia as well. And so I was trying to canvass all these, you know, friends that I've got out in those regions to find out whether they'd been told anything. But they've not just yet, but they've said it's all kind of, you know, masked in secrecy. If they haven't been told, at least they haven't heard of anyone, yes, that have been informed. So watch this space. Sometimes it's more interesting, especially when these companies say repeatedly, no talks have happened, right? So there is no.
Also on here, I've got interestingly, Bloomberg reported in May that Shell had been studying the merits of a takeover, but was waiting further stock and oil price declines before deciding whether to pursue a bid.
Yeah, that's right. And since that time, there were loads and loads of reports. Look it up as well, because a lot of people in the city, but also there were reports of Shell standing back for a bit to find out whether or not Chevron and ExxonMobil, so the US oil majors, were going to join and throw their hat in the ring. So a really interesting space. BP has, of course, been underperforming all its rivals. Let's have a look at the chart here now, looking at the BP stock there, and as you can see there, it's, you know, it's still very far off from the highs seen since February 2025, and it's still very far away from. Let's have a look at the monthly chart.
It's in the FTSE 100. Obviously, it's a market cap weighted index.
Yeah.
And BP and Shell, I believe, are both top 5. So therefore, any movements within with one of these firms, of course, has a huge impact.
Yeah. And
on the FTSE 100.
Take a look at that. You know, nowhere near the highs seen in 2006. I mean, here's the problem with BP, right? Trader friends, if you're trading in the space, great divvy stock. But essentially what's happened is they've been slow to react. And in addition to restructuring its strategy, it's also gone the way of beyond petroleum, only to have Trump 2.0 come into play, and now it's back the BP apparently stands for back to petroleum, people.
Back to petroleum.
Quickly. And so it's been a lot of painful restructuring on both sides, this pivot. Meanwhile, the Exxons and Chevrons, there was a bifurcation between the BP and Shell, so the European oil majors and the US oil majors, whilst the BPs and the Shells, European, decided to go, we're going to diversify into renewables and, you know, that space. The Shell and the Exxons stood pat and, well, they didn't quite say it, but, you know, they suggest, yeah. We're going to do what we do best, people. We're going to keep, you know, digging, but we're going to maybe invest in some moonshot programs. Do you know what moonshot?
Moonshot. I've never heard that term.
So in the oil industry, moonshot just means like this could work out, but it's a real small chance.
So therefore, they invest a small amount of money in it.
Exactly. And they invest in things like carbon capture.
Right, okay.
Yeah? Not like true renewables, but how about if we try and put drones and have it monitoring the funnels where there's gas. Every time there's oil and gas, there's exploration. There's a lot of what they call leakage. So it's just fuel that's wasted and lost, right? So they're looking at capture techniques to reduce and make it more efficient.
If they spend a small amount of money on it, it doesn't really matter if it doesn't work out, right?
Yeah.
At least they've tried.
Yeah. There you go. Mini Cooper should be in oil and gas. You could be head of Moonshot. Moonshot. Right. So let's have a look elsewhere. We also had really interesting news overnight from Micron.
Yes, we've got Micron Technology. So for those who don't know, it's a leading memory semiconductor company. Perfectly positioned for the AI boom. So yesterday, just after market close, we saw the share price shoot up and then it dropped off shortly after. I saw it myself. I was working the late shift till 9:30 UK time last night. Reason for this is they're doing very well on the sales front, but they didn't predict runaway growth, leading to a mismatch in expectations. Yeah, this would have been 9:05 where we saw that movement. Yeah.
And Micron as well. I mean, this is the thing. It's bet on this AI, right? Growing demand for this high bandwidth memory. And just taking a look at its stock as well. This is Seeking Alpha, another cool site, trader friends, that you might want to look at using because it gives you a really good snapshot overview. And I really like the way it's laid out. Seeking Alpha is also, if it's not still owned or part of Thomson Reuters, they took over this some time ago, and the idea was to spin it off after they put bells and whistles on it. But it gives you a really good overview of the PE. This is the forward, which is what we always talk about here. Rich and I always look at the forward PE, which is 18, you know, so pretty good. Your yield there in 0.36, 0.3% there, and also revenue growth year on year, 71% there. It also gives us the short interest, which is something I look out for, which is quite handy. So Micron, if you come off my Seeking Alpha, let us know, guys, if you were trading Micron or you've got that on your in your portfolio. This is one that we look at a lot here, but having a look as well at the stock, which is MU.
Should be all sessions.
It is all sessions, which is why we like this one. Take a look at that. It is, you know, strong upward momentum there still, but after these numbers, you know, we will take a look at this in the all sessions as well, right? We have to wrap because otherwise we won't have time for guess the stock. This time it is a UK stock. Okay, you got your glasses on. And there will be a prize, trader friends. So get ready because the timer is on and we want the first person to guess the stock wins. If not, then Ange wins.
What's the clue?
The clue is
It's just
You
a
want a
UK
clue?
stock.
Yeah, you should be able
It's
to
got to be
get.
more than it's just a UK stock, right?
It's a UK stock. It should be easy to guess. Take a look at the most recent price movement. Here we go. Hey, 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 trader friends! Welcome back to Opening Bell with myself and Minnie Cooper, who's going to ring the bell for us after this. But before we get to that, let's have a look at some of the guesses there. Monkey Man saying BP, Jugger saying none of mine. What does that mean? Neil also coming up with BP, but the person that won is Pocky 1977. Well done. Ring the bell. Let's go, Minnie Cooper. And we are off, trader friends, and it is looking early on here still very much like a risk-on day. FTSE is pretty much flat there. Germany 40 is up 0.4%, and elsewhere it is looking like risk-on. Really interesting stuff. I mean, not a surprise. It has to be said because, we're still seeing this market suggestion that the fragile ceasefire is going to hold. The whole BP and Shell story still awaiting further signs of life there. But after those moves yesterday, what do you think of these market moves? A slow grind higher?
Yeah. Well, the reason is because I think the conflict in the Middle East is more or less over. However, you never know. You never know what's going to happen.
Yeah, let's have a look at the individual movers, shall we? Just very quickly. Out of the board there, out of the gates, Entain up more than 2%, and Endeavour Mining and Rio Tinto as well higher. Talk us through some of the others.
It's okay if you zoom in a little bit more.
Yeah.
It's because of the lighting, I think. I don't know if it's my side, the lighting. We've got BP up 0.82%. We've got Anglo American up 81 basis points. We've got Fresnillo up 1.36%.
Good pronunciation. I'm very impressed. Very impressed. I can't say the same for Wardy and Lutmore.
I'll tell them you said that. We've got NatWest up 89 basis points, and we've got Shell up 75 basis points. Another bank up 69 basis points.
Yeah.
We've got Mr. McDonald's favourite stock, Vodafone, up 0.6%.
Yeah, and we are waiting to hear soon on an update from Elliot Hill as well. Let's have a look at the losers list. Let's change that over there. British American Tobacco, top of the losers list there. Mini Cooper. Take us through some of the others.
And then Scottish Mortgage Investment Trust is down 81 basis points. We've got Unilever down 0.59%. Rolls-Royce was a lose, but now it looks like it's come back up.
Yeah.
Just slightly though, so 0.1%.
Yeah, interesting that HSBC and some of the other banks are moving a bit lower. I guess perhaps some easing off there because they were higher yesterday. Banks
just now we saw Standard Chartered and NatWest on they were gainers.
Yeah.
But only by a small bit.
Yeah. Let's cross over to Germany, shall we? Let's have a look at what's happening here. Commerzbank is up 1.8% there. We also have, let's have a look, Siemens Energy and Infineon, top three, amongst the top three there, up almost 2%. Defense names also. Take a look at Rheinmetall, they're up 1.6% there.
See, we've got Adidas there, which is up 0.48%. We can talk a little bit about that later. So the fact that Nike are reporting this evening after close, so we can talk a little bit about Adidas.
Yeah, let's cross over, shall we? And not many losers there. Continental down 0.75%. MTU also down 0.5% there, not by much. Mercedes down just a touch.
Not many losers at all.
No, I mean, we had more of a reaction.
It seems like to me, DAX, I mean, just in general over the past 6 months is just doing pretty well.
Well, first was the repatriation and also the flow of US out of US assets into Europe, right?
Correct. Yeah, and we saw that, I know, around February time, where a lot of the fund managers are moving from the US to Europe. So, of course, the DAX. But the things with the DAX, a lot of the companies, even though they're German, earn elsewhere. So even if the German economy isn't doing that well, you could argue it does have an impact, of course, on the DAX, but not as large as one may think.
And also, don't forget, in Europe, if you're a fund manager that has been told, right, you need to now diversify into Europe and come away and lighten your exposure to US assets. You're going to look at Europe, guys. You're going to look at a map and think which area or which region or which country is going to look like the safest bet. The UK economy is not doing great. France, you've got, farmers throwing potatoes onto the streets, right? Working, trying to protect their 35 or 30 hour, is it 35 or 30 hour work week?
I'm not sure, but that doesn't sound bad to me.
If only we had that here. But Germany looking pretty solid. So no surprise there that you're seeing inflows into stocks in that market. Having a look as well at some of the other key stories that cross the headlines that we haven't yet covered. You want to talk about paychecks?
Yeah, so paychecks, they reported before market open yesterday. They were down overall in the main session because this stock isn't all sessions, therefore we'd be able to trade it online from 2:30 to 9. It was down 9.4%.
Take a look at that.
So for those of you who don't know, Paychex is an industry-leading human capital management company, and they process payroll for 1 out of every 12 American private sector employees. And what it was, weaker earnings led to the reduction in the price of the stock, even though there was an advance in revenue.
Yep.
So interesting. I was going to say, you can actually call in and we can trade this in the pre-market for you, because the pre-market last night would have been from 9 till 2:30, and you got the post-market as well, which would have been from 9 till 1 in the morning. So you can call in if you are in a trade and you really want to get in or out, as an example, and we can do that for you over the phone.
Cool. And the other big one that is coming up, of course, the king of kicks.
Yes.
Nike.
Is that what you call it, the king of kicks?
Well, that was what it was known as until its share price became like this.
Are you a Nike or Adidas person?
I am a Converse kind of person. Ta-da! Converse, yeah. And I must be the only person out there that watched Stranger Things just for the incredible wardrobe changes. Whoever was head of wardrobe for Stranger Things, unbelievable.
Do you even have a head of wardrobe? I didn't know it would be like a role.
Yeah, there is a role, head of wardrobe.
Oh,
so like if you have like Mad Max, you'd have a head of, like Fifth Element, they have a head of
like outfits, or
so
something.
there's a theme, right? And so they're in charge of like making sure for Stranger Things they completely nailed it. Because I was living in the US at the time, but back to Nike.
Let's talk Nike.
Yeah, is really a chart in pain that has been struggling to get back to its heady highs in 2021.
Yeah.
It has had a huge amount of restructuring as well. Those of you that trade this stock or invest in it, it has also really been criticized, slammed really, for just not being creative enough to gain growing market share in the young and upcoming market.
Yeah, I mean, its value over the past 3 years has halved.
Yeah.
Obviously, new CEO Elliot Hill came in October 2024. I mean, looking between, obviously you need a bit of time as a CEO. You can't just make things happen straight away. But between October 24 and now, from my perspective, in terms of like what I see people wearing out and about, I'd argue that 4 or 5 years ago, obviously you've got Air Forces, very popular, popular. And Jordans were quite popular. Saw a lot of people wearing Jordans. However, Dunks as well. I don't see as many people wearing them now.
But
so, after you.
Yeah, it's still. I mean, you hear Rich talk about the swoosh, waiting for the swoosh, the tick to change trend. But at the moment, this is what we always talk about here. The trend is your friend. Don't fight the trend. It's still very much in a downward trend. Also, taking a closer view here, it's interesting to note that it is struggling to even get to the lows of August 2024. Before we talk about the signs of a reversal from a technical viewpoint, you want to see inverse polarity, and that means that however much it fell here, it must have gained it back in order for the resistance or support to invert. Nike also, if you've gone into a shop recently, a lot of their shoes are just mushed into a pile. You don't see, the athletic side. You don't see female, offerings being pushed forward. It seems like they have lost their way, especially in the lower end.
What happened was this: they were basically trying to go off on their own, because initially what happened is they had good relationships with, let's say, Sports Direct, JD Sports, and now they're trying to rebuild that.
Yeah.
Because in my eyes, it was a big mistake, because, here in the UK, as an example, with JD Sports, if I was going to buy Nike, I'd probably go to JD Sports. Yeah.
And that dovetails really nicely to Andrew McKilvey's question.
What was Andrew's question?
On the trader front, JD Sports up the last few days. Let's have a look at that. JD.
I was going to say, I've got quite a little bit more on Nike to talk about.
We'll go back to, Nike in a moment.
Okay.
But, let's. Oh, do you want to finish off Nike first?
Yeah, so it expects a mid-teens revenue decline for Q4. So it's likely to be between 13 to 15%, which is significantly worse than analysts' expectations of 11.4% drop. Also on JD Sports, Nike and JD Sports have already launched a connected partnership in the UK, and they've also extended that in the US. So this allows customers to link their JD and Nike membership accounts for exclusive benefits and access to member-only products.
Yeah.
Interesting. Which I think is a good move from Nike, really.
Here's a connection to Andrew McKilvey and Mini Cooper. This is to do with JD Sports, and JD Sports can be used as a contrarian indicator. Plus, it can give you early insight to how to trade Nike. Bear with me. If you go into a JD Sports, it's the same as I do the same thing if I'm in the US. You go into a Walmart or sometimes they have it in Costco. There's almost like a last season's discount area.
Like a sale rail.
Yeah, sale rail. Yeah. Sale rack, sale rail, sale. In the US, it's like a sale mountain because it's stacked really high. I've got his interest up right now. He's looking at me really.
No.
And the bigger the Nike pile, the more this is going to be a stock in pain, the more it's going to continue. And the Nike pile in the US last summer was much larger than the Skechers pile. So that tells you a lot. JD Sport, just answering that for you, Andrew McKilvey, just putting up the chart there, JD Sports, having a look at that for you. Also, the question from Andrew is on the trader front, JD Sports up the last few days. Do you know why? Well, I can tell you that in the last few days, there has been some movement on the director's remuneration policy. Get that out. And also the stocks being held. So a helpful hint there, Andrew McKelvey. Look at that for some clues there. It doesn't exactly tell me on this what is in there, but it is interesting that has happened. So I hear the gallery trying to talk to me. Right, here is the stock results. Let's bring it up. But here we are. We have an early winner who was Parky 1977. Thanks all of you that also try to guess this chart. But Parky, send me your email on ask@ig.com and I'll get that sent to you ASAP. For those of you that are watching, slam the like and subscribe button so we can bring you more quizzes. And the next prize will be Mini Cooper. I can send him out as well. David Boise coming online saying looking to get long Nike after tonight's earnings.
On that, Axel's done a great article on Nike. So if you just type into Google and on the web browser, IG trading Nike, then it will come up with an earnings preview from Axel.
Yeah, and I'm going to put that up for you so you can find it easily as well. So as Luke Cooper said,
Adidas has been getting a little bit of market share from Nike because, of course, Nike's biggest competitor is Adidas. I've looked at their share price before coming on, of course, and since 2025, it has come off a fair bit.
Yeah. Come off that, I'll put up Adidas for you.
because I know there's greater focus on the clothing line with Adidas now. And in addition to that, they've got a target of basically become the #1 sportswear brand in all markets, except the US, of course, where Nike dominates. But I know they've both been struggling in Asia.
They are definitely both struggling in Asia, losing share to the incumbents and the new kids on the block. The Ons, I've not tried them before. The Hockers.
Very comfy.
Are they very comfy? You've tried them?
And Ron Dog's always walking around in Hockers.
Oh, I heard from Rich that there's more of a bounce, there's more support.
I know it looks like they've got quite a bit of support to like make you like a good 3-4 inches tall. That's probably why Ronnie's wearing them.
Right, Boise, Nike, just giving you some of the top lines. It could be poor indeed. Nike expected to report its 5th consecutive quarter of sales decline in the 4th quarter. This will be closely watched by investors who are wanting to know how exactly they are going to do a U-turn, run a U-turn on its
well, they've got to do something.
Share price. I mean, it's such a strong stock that Issa and I made a bet on it recently. So from Friday, 12 months from last Friday, he bet that the recovery in Nike shares will be higher than Lululemon's. And I bet that Lululemon's share recovery will be better than Nike's.
The thing is, Lululemon, in terms of stock price, hasn't done that well.
I know.
Recently.
I know.
Big sell-off. So
yes. So that's why I think it's fair game. But it's indicative as we're counting down to GDP numbers and durable goods as well. How hard the consumer staples are finding it at the moment.
I mean, Lululemon's has good growth in China, but here I've got on Lululemon Q1 2025 results beat expectations, but management cut the full-year earnings guidance. As a result of that, shares plunged 20% on the news, which is huge drop. Huge drop.
Yeah. So, and I don't expect those headwinds to fall away anytime soon until we hopefully get some rate cuts. Right. We are going to a quick break, but don't go away. Pop that kettle on. Go and get your toast. Go and get your muesli or whatever you eat. Monkey band. Do some of your exercises whilst we get Luke and Chris, who will be taking you through fast markets.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Here we here we go. It's actually me and Luke, and then it's Luke Moore and Chris.
The people must be disappointed.
I told them, well, I think this is what happens when Rich and Phil, sort off to the beach and, leave me here.
Surely Phil can work from Malaga.
No, right?
What's all that about?
I know. I called in from Milan.
Yeah.
Right? We had, who is it? Dylan calling in from Milan.
Yeah.
So surely Malaga's connection should be quite good. Right, just checking in on one big mover this morning.
Moonpig.com. So I wanted to do that. I used to do that when I was younger.
You love Moonpig, don't you? But look at that.
I'm always
move.
sending a Moonpig card.
Oh, down 7.3%. I mean, that is really disappointing. And those numbers, coming after its forecast, right? Slower earnings growth. You haven't been buying enough cards. Literally.
I'm always buying cards on there.
All right, let's have a poll if we can. How many of you, and you can just put it on the chat because, we've got 2 stellar directors in the house. Call out to Terence and Dom, who is in the Trade Live with IG gallery. Loads of applause there because we are running the ship. 2 people down and doing a stellar job, Terence and Dom there. Let's, if you can, just put in on the left-hand side, because let us know how many of you use Moonpig products or have used Moonpig products.
From the top of my head, I don't know who Moonpig's competitors are. If I was going to do a card online and I want a photo, I'd just go and use Moonpig, and that's the only company I know.
Yeah.
I remember their adverts being pretty good when I was younger.
They are really good. And also, the closest competitor I can think of is Snappy Snaps, but it's a poor competitor.
Yeah.
Right? Because they don't offer I think Moonpig does next day delivery as well.
Yeah. Moonpig's
and they have a whole range of gifts, not just cards.
Yeah, I've seen that. However, I've personally never opted for them. I've seen flowers, so it was my nan's birthday. I wanted to get some flowers, but I'd rather go to the local flower shop and order them from there rather than on Moonpig.
Yeah.
But I definitely, if I was going to go for cards and I want to include a photo particularly, definitely use Moonpig.
Yeah, so Moonpig, saying expects 8 to 12% rise in adjusted earnings per share in 2026. Also, goodbye Nikhil Rayatata after 7 years with the company. Is this the reason for this more than 7% rip lower? Do you think?
Interesting. Because I've got the RNS here, and like you said, strong adjusted EPS growth, high free cash flow, driven by the ongoing strength of the Moonpig brand. See,
I think it's more to do with Nikhil. I think everyone knew that, the UK economy is not great. Everyone knew that, the consumer space isn't great. But the fact that it's not just Nikhil stepping down, it is the fact, people, that there is no successor yet. They've just said that the search is on, but they don't have someone to take over. So that could be the reason why this move is so severe. But also some other big movers. Let's just have a look here to check for you. I believe I saw something cross earlier from my dashboard. Tesco not moving as much now, down around up around 0.25%. They reported a pickup recently. That's not moving much by now. But Tesco, out of the big 4, has been looking relatively good compared to the Sainos and the Marks and Spencers.
Love to see that, as I worked for Tesco for a year.
Oh, did you?
Yeah.
What did you do at Tesco?
Click and collect. Click and collect. Yeah.
I mean, that's been a growth business for them, right?
Yeah. I'm assuming Tesco still has the largest share, but obviously you've got Aldi and Lidl, who are doing pretty well, and I know I've taken a fair bit of market share, especially due to the fact that they are cheaper and we've got the cost of living crisis here in the UK.
Yeah. The other one that has been moving quite a bit Enes and Maurits. I hope Ronnie's listening to this. That's my best Swedish accent there. It is up. Let's have a look. Up more than 7%, people. On track for its best day since March 2024. So another big mover there for you. Some of the others that are moving quite rapidly as well. Worldline and also we talked about Moonpig already. That's down more than 7%. Valeo also up almost 3%. This is after Morgan Stanley raised it to overweight from underweight. Right, what else is on your radar? I'm just going to check on some of the calls here.
I'm looking on the LSE website because what I do, I come in just before they release the RNS at 7 in the morning, and then I'd send that out to all the clients who hold a position in that stock, so they're aware at market open at 8 a.m. of what the news is on that stock, and if they want to keep their position, if they want to close, or what they want to do. So I usually send that out. And on here we have got Volex, not that I know too much about them, preliminary group results for FY25.
Let's also take you through some of the key headlines. If you're just joining, welcome to you. We have Trump also, just as a reminder, saying he may name a successor to power early. This is according to a Wall Street Journal report. The ceasefire in the Middle East, still fragile, but appearing markets, though, suggesting that it appears to hold. And also Micron, we talked about this earlier, didn't we? Beat the street on its Q3 earnings, and Shell reportedly now denying the talks with BP, which actually in the city sometimes is known as the first sign that there have been talks.
It didn't take them long yesterday to deny the Wall Street Journal reports, which suggested that the takeover was on. But
yeah, key macro events. Let's cover that as well, because it's all about growth and the consumer. We get the final reading of Q1 GDP.
In my personal opinion now is, since Trump's got in, macro events aren't obviously they are important, but they're not as important as they were. As an example, Trump can just tweet and the markets move like that. When Biden, previously, it just wasn't the case. But now, let's say before you've got NFPs, you've got CPI, they were things which would cause, what we're looking at more, but now it's just not as relevant. It is, but it's not as relevant in my eyes.
Well, the focus has shifted, right? Yeah. The interesting thing too, Matt Arb and I were talking about this, is that some of the not as relevant one during usual times, sometimes the B-listers can also suddenly become important in quiet weeks. But it's certainly not a quiet week this week, because most eyes are still on the ceasefire, which is still quite fragile there. We also have core PCE jobless claims as well, and also don't forget, after the close we have Nike. And we've covered that already. Let's just take a look at the commodities space as well, because we haven't looked at that. We still have WTI holding up quite well there, up 0.5% there, and Brent as well, up 0.5% as the ceasefire appears to be holding. Gold pretty much up 0.5%, but really trading sideways around the previous session's levels, ahead of some Fed speakers expected later today. And copper, let's have a look at copper, because copper is a really interesting one. A lot of your clients trade copper?
I wouldn't say so, not compared to oil, gold, silver, nat gas. They're the more popular commodities with copper. And I genuinely don't have conversations with clients over the phone about it.
Now, so I want to put up copper for you, trader friends, because this is what I like to illustrate here. And you can see I have 3 perforated lines in yellow, so it's easy for you to see at home. These are the lines of interest for me. And once we get a close above, the next target is now fully drawn out. So you can see I've even put a little text box there to remind and where the next level is. So it's really easy and simple. You can put this also on your alerts. Don't let this stop you from making an alert, because you can also choose to, if you decide to set an alert, and this will then come through to your platform or your phone. But copper really getting underpinned by the weaker dollar, right? And also watch all data out of China, because recently we're seeing this lift as well in copper, thanks to smooth music from Premier Li in China saying that they're going to boost consumption in terms of copper. Right, so how many more minutes have we got to go? 2 minutes. Let's get you through some of the potential key moves later.
We've got something from Kirky there. The announcement from Shell mentions that having now announced that they can't bid for the next 6 months due to UK regulations.
Yeah. So.
And we've got Funky Pigeon for cards. That is one I know, to be fair. Thank you very much, Jim John.
Have we got a result for the polls? Dom and Terence? Yeah, let's have a look. They sell birthday cards with bad jokes. Chugga. Right, here we are. Read it out.
Only 13%.
Oh.
I'm shocked.
Wow. Wow. I am shocked too.
It's made me a little bit upset, actually.
Oh.
Seriously. I'd recommend it for those people that said no.
Oh, he's upset. Mini Cooper's upset. I would recommend it too. I mean, if not for anything, but just I like the fact that I don't have to go to the post office.
Exactly, yeah.
So I have used, Pig. Also, Pesamali, good morning to you. Haven't seen you on before, so welcome to the show. Whereabouts are you? And Jim John, Funky Pigeon, that's right. They're also good, but I've never tried them before. We're about to go to the break, but just to get you across, we also have Diageo with upgrades. Entain as well had an upgrade from Goldman. ASML downgrade by Jefferies. And last but not least, there's also, I believe, other Nike Walgreens later on today. Right, how's the rest of your day panning out, Mini Cooper?
Just on desk. I'll do inbound calls, few outbound. I've got to do some prep on seminars, which we're going to have upcoming for our premium traders as well.
Right, cool. Parky1977, send me your address on ask@ig.com. Hit the like and subscribe button, people, and we will have Luke Moore and Chris Beecham up after this.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Good morning and welcome back to Trade Live with IG. I am your host for the next 20 minutes or so, I suppose.
Yeah.
Luke. I was about to go off into my talking shop introduction there. I don't know why. So
It's just a habit.
it's a habit, yeah.
It's like the red light, and you go on.
I just go crazy, yeah. Well, welcome back. I mean, this subject is called investing experiences, but I think what we're actually going to do is spend a couple minutes actually diving into the Shell and BP story.
Yeah.
I think it's been covered this morning by Ange and Luke. But what I first wanted to share was something that Rich sent me over the weekend, of course, last week. And I think this aptly describes us a little bit.
This is me. I get paid to do this every day, really.
I couldn't get ChatGPT to create a Shell BP merger expert in time, so apologies that it's not fully there. But what I did create for you is a beautiful graphic of what we are talking about today. So yesterday, the news broke that Shell was looking at BP, of course, very quickly denied, and
Very sternly denied by Shell.
It was very sternly
Yeah,
denied.
we have no intention whatsoever, or whatever it was. No talks have been had. Nobody's had any lunch with anybody.
Yeah, I don't believe it.
You keep a folder for this. You think on the shelf, just in case we feel like buying BP. You would keep it there.
What, you just have the sound bites that you're going to reel off just in case?
Well, yeah, and the folder. They had the whole thing worked out, but they just wouldn't use it. It's just in case you dust it off and think, maybe we think about this.
Does it become, when deals are this big, obviously a lot of people know about them. If let's make something up in the sense and say, if this was to happen, it's going to be worked on for months with a lot of people.
Yeah.
Everybody signed up to NDAs, and so anything like this, if it leaks, that's when the denials come out. Has to be.
Yes, and the old joke is never believe anything until it's officially denied, is the old joke from the USSR.
Oh, really?
Until someone says, no, it's not happening, it's definitely happening. And this is the key thing, really. And it's almost done deliberately, I think, to sort of flush out other bidders. Because if you are thinking about this, you roughly want to know where the price is. Because you can think what Shell can say, well, we think BP is worth this.
Yeah.
And we're prepared to bid this. Others might come in and say something different. So the idea is maybe almost, and now as they say, Shell, we can't bid for 6 months. So we sort of ruled ourselves out in a sense, unless we're specifically invited by BP. So it's almost tipping their hand to see who else is going to come out of the woodwork now, and is BP maybe going to be happier with a Shell deal than it is with some private equity deal? We don't know.
Yeah. So I think what it's worth looking at is, if we could pop this back up on the screen, why?
Yeah.
So why would they do this? And so you've got here the reasons on the left as to why they might acquire them, and the reasons on the reasons on the right as to why they wouldn't. So clearly, Shell is much bigger than BP. Okay, and actually what I'm just going to do is I'm just going to skip forward to the 5-year share price performance, and you can see really where it went wrong. They never really bounced after COVID.
No.
This is, of course, a relative basis. I've benchmarked it for 2019, and you can see in 2019 they were roughly the same price, and that's when they really started to diverge. And actually, Chris, you've got a really good chart that I'm just going to flag up.
Yeah, using the one of my favourite functions, again, I've said about before, total return. Look at the total return of not just the price, but the dividends included. So I've compared this, the last 5 years, S&P, the FTSE 350, then look at the oil and gas ETF XOP, I think it is, and then the sort of big four that we're talking about here. And the key outlier there is BP, because it's not been a bad 5 years for markets, and yet BP is only up nearly 40% over the last 5 years.
The S&P doubled.
Yeah, the S&P's doubled. Shell and Chevron, Exxon, absolutely storming performance.
Yeah.
So if you'd picked anything but BP, you'd have done all right. So you can understand why investors in BP feel aggrieved. And there's all these changes of management, people saying, look, the company doesn't know what it's doing, essentially. Everyone else is doing okay in what has been a very choppy time for all markets, if you think where oil's been and gone over the past 5 years. And yet BP really struggling, partly, I suppose, because of that massive green transition thing, that we were going to be big in green. We're not British Petroleum anymore, we're be something else.
It was only recently, actually, just while I pop this back onto the other side, it was only recently that I found out that BP was founded in Iran.
Yeah, it's the Anglo-Iranian Oil Company, which is interesting given current events, because it was created to take control of the oil in Iran, actually for the Royal Navy. They said, we don't want coal, we want oil because it's cleaner and quicker. And so they did that, and then eventually was nationalised by the Iranian government in the 50s, which then led to a coup in Iran, really, by the US and UK, which the Iranians are still justifiably angry about, which partly explains why they hate America.
Well, supposedly
quite so much.
It was kind of before there was oil in Iran, before there was kind of discoveries, we went across and said to the government, I'll give you a 60-30 split. We take 30%, you keep 60.
Yeah.
And they struck oil and
suddenly
went on for it.
Exactly. And it was a massive sort of expat UK community over there. Huge numbers of people obviously work in the oil industry in Iran.
Yeah.
That has changed massively. Of course, it was interesting when you had Deepwater Horizon and Obama referring to BP as British Petroleum, which went down very badly because they've not been British Petroleum for a very long time in BP.
Okay, so what makes BP attractive? Of course, I imagine the price for one, but we've found that scale is going to be a big reason. So if you look at BP's attractive assets, they actually have some of the most valuable liquid natural gas operations, certainly traded in the UK, or certainly kind of outside of these majors that we've already discussed. And they've got a really good trading business. They've got a great trading business, and they still have some strategic oil and gas reserves. So they do have some targets. They of course have been hampered by the kind of move towards green assets, and that's kind of been distracted. And that's of course why Elliott Management took a stake last year, I believe. They looked to try and take a 5% stake. So this is potentially
putting pressure on BP to change its style. Exactly.
Yeah. And so we know why. Okay, the valuations look attractive. They do have some very good assets, and there's a lot to strip off. So what are the key challenges there then?
Well, I think the obvious thing is that regulatory hurdles. Someone's going to say, look, the two massive oil companies, what does that do to the market, particularly in the UK? And also the fact that it's just carrying so much debt. Now, you're going to acquire a fairly cheap multiple compared to where it was, but it is going to be quite a load to take on for Shell. I don't know what Shell's debt is at the moment, but yeah, another 50 billion of debt. It's not great. And what is possibly an uncertain time for oil prices, you could argue maybe they are poised to go high. Investors are fairly underweight oil at the moment. They don't love oil assets, understandably, given the way oil's performed. So you could argue maybe there's some upside here, but quite a big sort of lunch for Shell.
Yeah, but you'd also argue, though, looking back at the total returns that we've seen for the bigger players, they've been fantastically. They've been performing better than the S&P over the past timescale on whatever that chart was.
Yeah.
And so whilst the underlying hasn't necessarily played a massive part, the big players have played a massive part.
Yeah, they've done really, really well in that sense. And Shell, you get a dividend yield of about 4% as an investor, market cap of 150, which is smaller than the US ones, of course. So it would at least create, talking about how UK companies have been so poor performers, it would at least create something that has a bit more heft to take on these US giants from all these years of consolidation.
Is, in your opinion, because I don't look at debt as much as I probably should do, on a market cap, on BP's market cap of 58, net debt of 21, so that's roughly what, nearly 35-40% gearing?
Yeah. That's
Is that normal?
quite brutal. I think for BP it's higher than it should be for the sector.
Okay.
Really. So there's just because it's been such a problem. I think really. So look at the total liabilities when you chuck again pensions in as well. Then it's a big thing to swallow for Shell really. But it's like if you want to be on the global stage, you have to make this kind of move, and you can argue maybe they're swooping now when BP has been such a poor performer, rather than waiting another 6 months. really, when someone else might come in, I think.
And that's the question. So if we know now that Shell aren't allowed to come back for 6 months, who else comes in to talk about them? And I think that's where it becomes a little bit more of an interesting conversation. So the potential suitors now, if you look at the big US players, I'm just going to see if I can make that a little bit bigger for your and mine eyes. Shell is probably the most obvious candidate, but we now know that they're going to have to take a bit of a backward step. I think the crown jewel of BP is then liquid natural gas business.
Yeah.
As we all know, over the next kind of 20 years, liquid natural gas demand is expected to grow by about 50%, with a lot of growth over in Asia. It's being touted as the bridge fuel. So as we look to kind of get towards the energy transition, it produces 30% less CO2 than oil and 40% less than coal. And so it's increasingly seen as not necessarily a green fuel, but it's seen as greener than the incumbent.
That's the most important thing, really.
Yeah, correct. So it's still a strategic asset. So our research would suggest that ExxonMobil is probably up there with Total and Chevron. But don't forget about private equity.
Yeah.
I don't know. Obviously, Elliott have got a stake. Could they form some form of conglomerate to take a look at it, or would that be an attractive asset flip for them to take it on and kind of strip everything out and do everything they're already putting pressure on the board to do, but do it themselves?
Yeah, that's the key thing, really. Would a private equity sort of dismantle a lot of BP and leave it out there? And Andrew McKelvey saying there, yes, but the other problem with BP, of course, how much of this has been tied up in litigation in US courts and the reputational damage.
From deep water?
Yeah, from deep water and all this. Does Shell want that problem? Because you doesn't want to be another Bayer Monsanto moment when you take over what looks like a good deal and then suddenly you're saddled with this huge amount of court cases.
Well, there is a reason, right? You tell me all the time, right? The reason why something goes down, just because something's cheap doesn't mean that it's time to buy it.
Exactly, it's cheap for a reason. And BP probably definitely is looking at the sort of forecast multiples. Remember, it's trading at 11 times earnings for the full year, and then 10 times earnings for next year's earnings. So it is cheap versus Shell at 16 times earnings. But obviously it's one of those cheap for a reason. So would you want that? But the time has to, maybe the time is now. And I think people are looking at it just saying, look, BP is poised for something. Somebody's going to come in at least at some point and say,
well, if it's trading on 10 times multiples, that's cheap.
It is cheap.
That is cheap.
But it's still a global oil company with plenty to recommend it.
And it still pays a dividend, right?
Yeah. Yes, dividend yield currently about 6.8%, so fairly.
Which is double the FTSE, from memory? FTSE 100 average?
I think so. Testing my dividend knowledge there. What the yield is off the top of my head.
I think, I looked it up recently, and I think it's around 3.2%. FTSE 100 dividend. It is, if Google will load for me, 3.4% current FTSE 100 yield. Yeah, so roughly double.
So that, and don't forget, of course, that BP return is with dividends included, so that's why they've done so poorly. If it wasn't for the dividend, they would probably be in almost negative territory at this point. So it's a very interesting story, and I expect other names will appear, I think. And I think the more Shell deny this vehemently, the more likely it is that they've had a look over the last few days.
Well, yeah, fascinating. What else is going on in the world? NASDAQ at all-time highs?
New all-time highs.
Celebration for everybody in tech.
And everyone's looking at this going, it can't possibly keep going up. Look at all the problems that go with it. And you're right in a sense. And tariff deadline day is what, the 9th of July?
Yeah, I think so.
So that is approaching, although, again, they were talking about deals being done yesterday. But I think some people are right to ask, why are we trading right up here when there's so much uncertainty? And it's hard to rationalise. Now, the thing is, remember, you don't have to rationalise things in the markets, it just is. And if you're looking at this from a trading perspective, clearly the momentum is the upside. If you're looking at this from an investing perspective, maybe as Rich, but I can probably hear him shouting from Milan, why would you want this at this kind of level? Yeah. Really, it's not cheap as it was back in April.
No,
it's
but I'm
facing the same problems.
I'm a big proponent of momentum.
Yeah.
And I think the
very powerful force.
It's a very powerful force. And I think if you look at the typically buying all-time highs is not a bad way to do business.
No. Well, if you're prepared to hold long enough, of course.
If you're prepared to hold long enough, yeah. So even those investors that use all-time highs as a buying opportunity have typically been rewarded. But as a trader, you're probably going to want to start to look at downside protection. You know, if you were worried about a pullback, the volatility is low at the moment.
It is.
So you know, to borrow a Tom Sosnoff phrase, you want to buy protection when no one else needs it.
Yeah.
So there are some cheap puts out there. You know, you probably
just as a kind of insurance policy, really, just to say this might be volatile at this point, and you might see further uncertainty. But of course, you've got to remember all this money that came sloshing out of US markets in April when tariffs hit, and the fund manager surveys keep saying people don't want to be in the US. When that flips, because the more this keeps going up, the more fund managers are going to say, look, I've got to be back in this because I'm missing out on returns.
Do you think the pound is playing a part in that as well, from our perspective?
It's partly, yes.
137 this morning.
Yeah, and a lot of the dollar weakness as well, because again, you've had Trump and Powell overnight. The Trump Powell show has taken another turn because did he call him stupid again overnight, I
think he called him stupid, and he wants to announce the next Fed chair by September.
Yeah, and there's a jockeying from position this week amongst Fed members, Waller most notably, saying, I think we'd like to cut rates. So they're clearly auditioning for the position.
September, October.
Yeah,
so they're expected.
There are people saying, and even if you do get someone in, say you picked a completely random candidate from outside, you'd still be facing a Fed board that's mostly, cautious people that are previous appointees. So you wouldn't suddenly get a Fed that comes on, we're going to cut rates by 200 basis points, everybody, we're going to have a massive party.
Yeah. I was listening to, I like the All In podcast. So have you come across these guys? It's, I'm going to butcher his surname, but Shamath Palihapitiya. He was a kind of big VC. It's a collection of VCs. And David Sachs, who is the crypto czar over in the States, is a guest, and he's always on there. And they did a big thing this week about this, and they were saying, actually, even if you take off Jay Powell, the voting members are more Democrat than they are Republican. Yeah. And so if you're trying to argue that Powell isn't cutting rates because of a political reason, say you'd slice the head off the dragon, I don't think it necessarily changes the voting mix.
No.
So you have to then go through and start to kind of create.
Don't change the entire board. You'd need plenty of new members. You wouldn't get. It's not Powell blocking.
Correct.
They're not. You can see the minutes. You can see the voting. They're not desperately calling for rate cuts in every meeting, and Powell standing in the doorway saying no. It's the whole committee saying we don't think it's right. And it's interesting having the vice president on X yesterday saying, oh, why did Powell cut by 50 basis points before the election? He's not cutting now. But you can explain to Mr. Vance, slow as he is sometimes, that it's because, as Powell said this week in Congress, they are just waiting to see where this tariff inflation comes from. And Powell can't say, it's your tariffs, by the way, sunshine. But that's essentially what they're waiting for, to see whether this does, if it's just a one-off and they can look through it, or if it is going to be more sustained.
Let's just have a little look at that FedWatch tool just to see kind of where the probabilities are now, because I believe they've changed quite a lot recently.
Yeah.
And I'll zoom in a little bit more. So you've now got that September meeting is now looking more and more likely like it's going to cut. And I believe that's come up fairly recently. So that
because
has now
those
become one of my favourite.
two speakers this week have said, I think I would have. These people that voted for a hold in June are now saying, oh, I would vote for a cut in July. That's a bit silly. But yes, it does greatly boost the chances of a September move, really. And Morgan Stanley says they've got 6 rate cuts penciled in for next year.
By next year?
Which is fair, by the end of next year, which is a fairly punchy view. And you would assume, it doesn't include a recession in the forecast, so I don't quite know how they're going to suggest the Fed could sell 6 rate cuts outside of a recession without inducing some kind of...
Well, I mean, I suppose...
markets.
I mean, the probabilities get pretty broad down here. So in terms of how to read this chart, you've got the ranges are always set when it comes to these rates. So you don't just cut to say 3%, you cut to a range between 3 and 3.25. And so these are the various different ranges that you're seeing up here. It's suggesting that by July of 2026, there's a 30% chance rates are going to be within the 3 to 3.25 range. So that would suggest that the market is currently pricing in 2. Well, I mean, there's no real majority for 6, because that would say we're here now, 1, 2, 3, 4, 5, 6, only a 30% chance. I mean, there's not really consensus outside of 4 by January.
No, exactly. So I think it's pushing it, I think, really. And markets can cope with this. This is the key thing of the market is hoping for Fed rate cuts. I don't think it is particularly. I think it's quite content. What it will be bothered about is if the Fed were to start hiking rates, but that's not the way it is. If you look at the 2-year, it's continued to track lower, so the Fed rate is actually above the 2-year at the moment. So you can argue that the impetus is still for cutting rates. And the gap between the interest rates and the 2-year was wider back in August, September last year when it did cut rates.
But what about the stagflation argument?
Well, this is the key thing, yes. How much is inflation going to impact everything? We're still waiting for this. We're still waiting for fresh CPI data. We won't really get a conclusion probably until August, September, I think. Everyone's saying it might be July or August. I think it's going to be later than that. If you look at Trump's first term and tariffs, inflation didn't really start to show up until about 5 to 6 months afterwards. So this is the problem for the Fed, that if you cut now and then you have to reverse course, that doesn't make you look good in the world of central banking. And in sort of image is almost everything, really, looking like you're competent and not having to change policy suddenly.
Yeah, but I suppose that's worse, isn't it? Because I know I've seen him touting off, well, you could cut by 1%, and if inflation goes back up, you just raise them again. That is, I mean, imagine if you're trying to remortgage. Imagine if you're trying to create, business loans. Imagine if you're a CFO in a company trying to buy an asset or trying to, potentially build an asset. If you're in, this reshoring efforts. If you're borrowing money and the rates are all over the place, that's probably more damaging from an uncertainty and a lack of capital deployment perspective than simply cutting because Trump wants you to.
Yeah, it's that about turn that you'd have to do does nothing for your credibility. And what central bankers are desperately trying to do all the time is to maintain that credibility, to say this is master of the universe thing that they get from the crisis, from the financial crisis, is we will look after this, we are in control, which is why 25 basis point cut or hike is okay. 50 starts to look like a bit of a panic moment. And to go from the one to the other very quickly just means you are out of the loop, really. But yes, the more Trump talks about rate cuts, the less he's likely to get them, because the Fed has to maintain the image of independence.
But is the argument the fact that they're not, I mean, I get the whole waiting for data thing, I do, but the data's not been that bad. I mean, we saw the last retail sales print in the US was down 1%, so that was worse than expected. So you're starting to see maybe a few cracks.
Yeah, signs of weakness, I think. But again, it's the inflation element that's bothering them more than anything else. I think if you looked at the employment situation, it's fine and dandy.
Totally fine.
There's no concerns on that front. It's the inflation game they're focused on at the moment.
Inflation's been the same for
yeah, but they're still worried about what happens next. This is the worrying thing for them, and that's why I think caution is the dominant mode among central bankers. Don't do anything if you can possibly avoid it, really.
Okay, fine. Well, I think that's pretty much all from us just now. We've probably got only about 10 seconds left to go. Any closing remarks that we can share?
Well, markets have reacted quite happily to ceasefire, so there's the momentum, as you say, continues to be to the upside in the short term. And just because it's summer doesn't mean we're not due some kind of correction.
Yeah, and also just be aware that if you're reading articles that suggest that the world is about to fall apart, it's going to give you bias, right? It's going to
Zero hedge
play what you see. Yeah, play the game you see, not what you think you see necessarily. There you go.
Very true.
Very true. Cool. Right. Well, we'll be back in a second. Angeline and Elliot are back going to be for the opening bell in just a few moments' time. We'll see you later.
Bye-bye.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, welcome to the show. It is the one, the only Elliot Harris. Hey, here from the Bold Desk. Hey, Elliot.
How you doing? You well?
Yeah, good. Great to have you on board. Just bring up my watch list because all sessions is now on. Let's have a look how it's shaking out.
What are we seeing?
Wow, we are seeing a lot of risk on today. Plug Power up more than 5. Actually, it's come down a bit now, 4.5% there. Lots of the crypto-related and quantum computing type names also riding higher there, and hims and hers up more than 2%. Reddit also higher. Do you use Reddit, Elliot?
Very rarely, mainly for DIY jobs and stuff like that.
Look, Elliot's a really dab hand at tools, let me tell you. Right, and on the downside, we have Delta Airlines giving back some of the previous sessions gains, down 2.5% there. And ASML down more than 1%. BioNTech is down 0.75% there. And we are also seeing some movement lower in some of the mining and EV names there. Just quickly checking on Nike, because I think Nike is also all sessions ahead of its earnings. It is currently up 0.4% there. Right, Elliot, it's been such an interesting week. I am so pleased that you are on with us because, you know, we've been talking about, you know, oil markets, indices, you know, gold. So far, the last few sessions, pretty much shrugging off, you know, the tensions in the Middle East.
Completely. So it's been a decent injection of geopolitical risk. There really has. And US equities have not cared one iota. So, pretty much testing the all-time highs again. And implied vol is falling every day. Which I'll come on to in a bit, but yeah. Oil is the only really asset class that's really cared.
Yeah, I've got your chart here, which I'm going to whack up right now.
If you can get that up, and I can talk you through that.
Elliot loves testing my tech capabilities because he sends me a multitude of charts 5 minutes before. Because
I like to keep you on your toes, don't you?
Keep me on my toes. You do. You keep me young. Right, here we are.
Right,
here's the screen.
Here. So this is implied vol versus realized vol. Now, a week or so ago, when tensions were at their highest, the spread between IV and RV was about 30 points, which is a 20-year high.
Mm-hmm.
Now, that is completely unwound over the course of this week. So now what we are seeing is RV is significantly over IV. So yeah, the market has just kind of said, okay, right, the tensions haven't completely gone, but we're significantly happier than what we are. So, okay, the short-term risk is still maybe targeting the top side, but for me, the longer-term risk is more towards the downside again. Yeah, so it's been a real shift in that vol spread. So, what? I guess no huge surprise last week, given what you say that 20% of the world's oil has to pass through the Strait of Hormuz. Yeah. I've probably pronounced that horrendously, but there you go. But yeah, the 1 month vol has collapsed from roughly 70% to now sub 40%. So quite a shift in vol on crude.
Nice. And, you know, this really ties in really nicely with what I was showing our trader friends as to what I was using, because they were asking me, and, you know, what made you say that, you know, oil likely to be lower, and why is Dylan talking about a short when shorting oil when things are heating up after Friday the 13th? I was like, well, have a look at the marine traffic website. Have you used marine traffic before?
Can't say I have, no.
It shows you in real time all the ships that are passing the Straits of Hormuz. It's like an airline tracker. And
there must be thousands.
yeah, yeah, and like still looks like a real traffic jam there. So no change, people, until we see that the straits being empty or starting to empty out. Then start to worry. Right. So I've got two other lovely charts from you. Should we move on to equities now? Because vol has been very soft there, hasn't it?
Very soft there, it really has. I would say that RV's probably been the lowest in S&P this calendar year, actually, which, given the political climate that we're in, might come as quite a shock to people. But yeah, as I said at the start, US equities just haven't really cared at all. So if you have but what I will say is that the skew has hit the highest that is seen over the last calendar. In fact, over the last 12 months. Okay, so I do a lot of analysis over 1 month vol, 3 month vol, 6 month vol. You would see that the 3 month put vol is probably one or two points higher than it was pre-Liberation Day on April the 2nd. But where the skew is really pronounced is on the 3 to 6 months, so the longer term contracts. And what this basically means is that, okay, whilst the at the money vol is hitting calendar year lows, the put vol is getting bid up week on week. Now that tells me that, okay, the expected move is reduced, absolutely, but people are still relatively nervous out there. So there's a lot of demand for downside protection, and we're seeing a lot of interest going through on the 3 month and 6 month contracts. Okay, so yes, vol has definitely eased. Yes, vol is very soft, but the downside risk is still lingering there, if you like. So plenty of activity on the put side.
Yeah, and this is really interesting given we are getting close to those tariff deadlines, right?
Absolutely, yeah. What, July 9th, so 2 weeks away, perhaps?
Yeah.
Not long.
Not long indeed. Also, give us a sense of, this other chart that I've got here on the S&P 500. I'm going to try and bring it up right now. So here we are. I'm going to zoom in. This is the S&P 500, SPX.
Yeah, so similarly to how I showed you the IV versus the realized vol curve, or vol spread, if you like, on crude, this is the same graph for S&P. You can see the huge spike that we saw during the tariff frenzy in April, and then very aggressively came off second half of April, and that's kind of continued. So, as I said before, S&P RV is trading at calendar lows, 7%. You don't get vol going much lower than that on S&P. So implieds are getting crushed. 1 month vol is around about 15% or thereabouts. But the RV is significantly under that. Okay, so markets are very much stuck in a range / a slow crawl higher. What's the market waiting for? Are they waiting for the start of July? Possibly. Obviously, Fed is a July cut. I think is probably going to come too soon.
They're calling it the Fed Fund futures suggesting September, right?
September, yeah. So 70% implied for a 25% basis cut in September. July, there's only a 25% chance of a cut. So July, I think, will come too soon. September's not a given, but certainly it's, if we spoke a month or so ago, I think July was probably 60 or 70% chance of a cut. So they're still playing this waiting game for the data. And as I heard Chris and Luke saying just before, the data's not been that bad. And yes, you may have Trump saying, okay, why can't we have a 1 point cut and just to put it back again? Well, the Fed can't really be seen to be doing that. So they've got to be very careful. They almost need to be sure that the data is sufficiently bad for them to jump, because once they do jump, it's very, 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 very difficult to untangle that. So by the end of the year, they're implying between 50 and 75 basis points worth of cuts. I would certainly be on the lower side of that.
So Elliot, what is it going to be? What is going to actually,
push volatility up? Is it, the outcome of the tariff deadline? Is it, there's now the mood music surrounding a new Fed chief, September, October time? Is it some sort of change in the apparent ceasefire? What is it going to be that's going to nudge volatility higher?
Certainly in terms of the short-term shock, yes. Anything
because
in the Middle East is
your
obviously
chart.
going to be a
This is
major driver.
incredible, right? We were talking to Matt earlier this week, and it seems like, missiles lobbed and drones lobbed and buster bunkers. Markets don't seem to care about that. But compare that to the tariff tantrum in April. That was
absolutely, yeah. It's very different when it's happening away from US shores. If say that was to be retaliated and land on US shores, there's a very different argument, and you're going to have a very different picture. So yes, very much that's the most likely short-term catalyst, if you like, of any vol. Longer term, something pretty drastic is going to have to happen, I think, for the Fed to. The market doesn't like uncertainty, okay? So the market is always going to have its dot plot out, okay? So that, and we have seen a fair bit of vol actually in that dot plot over the last 12 to 18 months. For that to change, yes, that came as a shock with Trump saying that he's considering appointing Powell's replacement as soon as September, October. Powell's got 11 months to go. And obviously things there haven't been entirely rosy, but Trump's probably not the most difficult person to be falling out with. So usually these things are announced 3 to 4 months and there's a transition period. So that would be quite a divergence. So yes, if someone does get named, does that enable the new incoming person, if you like, replacing Powell, does that allow them to kind of set their own tone and preempt their path? Possibly. I don't think that's likely. Yeah, so in terms of where do we think the market is going to be doing a U-turn in sense of its current risk on appetite, Middle East is going to be the biggest catalyst, but I can't see that happening, to be honest.
Right. Come on my chart there, because we're going to have a look at the US dollar as well. One of the key ones I've been watching earlier this week as well. I mean, dollar weakness there. Still, just going to whack that up for you. Still, pretty much persisting, underpinning the price of copper as well and many other commodities. And we're seeing, short covering unwind as well. I mean, is this going to persist for much longer, this in terms of this continued weakness in the dollar?
I think so in the short term, yes. As you said, we did see a little bit of USD short covering back end of last week and over the weekend. But that's been reversed. It's not taking the market much to do a very quick U-turn there. So back to where we were a week or so ago, where the USD's been weak for quite some time now. In terms of FX vol, FX vol's been fair. It's spiked slightly, I would say, this week. But yeah, that's definitely been the generic theme. USD's been weak across the board. I don't really see that changing too much in the short term.
Are we in a situation now where most of the volatility is going to be in indices and oil and gold? Is that where most of the action will be for the next few months?
Definitely less on the index side. Indices, yeah, as we've seen by the complete lack of any reaction, if you like. But gold and oil, definitely. Oil is by far the highest IV out there. It's by far the highest RV. That's where all the action is. We're seeing loads of business on the options, which has been fantastic. Premiums have been smashed, I would say, over the course of this week. For vol to go from 70% to sub 40% in the space of a week is pretty drastic.
Yeah. And that's just checking on gold as well. Just pulling up the weekly options contract there. It's at implied vol at 17.
Yeah, so that's come off somewhat over the last 3 or 4 weeks. That was low 20s. Yes, the C and vol ease there as well. So yes, gold and oil vol definitely the highest out there, especially the latter. We've seen vols somewhat crushed over the last 10 or 14 days.
Right. So, you know, there's so much on the table. I mean, it's almost like we have a whole year in a week now that's happening. And next 2 weeks is going to be particularly interesting. Of course, we've got, you know, tariff deadlines in sight as well.
Yep.
And deals expected to come as well. What do you expect to come out of those deadlines, you know, if anything, or is it going to be kicked into the long grass again?
Very much in the latter camp. I think this is going to be kicked down the road. All right. Some trade deals are expected to come. India, Vietnam, Switzerland, I think, are close to deals. EU and Japan, it's harder.
Or Trump says, right? Close to deals.
He says, yeah. EU and Japan, it's a lot more tricky. So I think the EU is highly unlikely to reach a trade deal before the July 9th. Are we then going to see the 50% tariffs be imposed and tit for tat EU impose, okay, retaliatory tariffs on 100 billion euros worth of US goods, in which case it's going to get escalated to be de-escalated again. Just deja vu, exactly what happened in April. The market isn't going to react in the same way. That was a crazy 2 weeks, which I don't think we'll see for quite some time again. I think this just gets kicked further down the road. Is he going to come back with another 90 days? It's possible.
Right, and on that note, thank you so much, Elliot. It's been lovely, as always, having you. And I'll catch you on the vol desk a bit later on, just to talk about DIY tools and things. Elliot, Trader Friends, has a really good eye for ladders and brands of ladders. I was very, very impressed, I have to say. Take my hat off. Right.
Many talent.
Thank you. Thank you very much. And don't go away, Trader Friends, because we have a special treat for you after this. For those of you that watch Trading Experiences, we've got Gabriel Nausbaum. I'm hoping I got that surname right, but he's going to be talking about, you know, how he started his trading journey. Yes. On Trading Experiences with Rich right after this.
Welcome back to Trade Live with IG. So, our next guest has mastered the art of making social media real, relatable, seriously impactful, and gives financial insights into mindset gems. Gabriel Nussbaum, how are you doing, sir?
I am doing well. I'm very excited to be here today.
It is really good to have you in. This is a big jump for us. Because I think TikTok, you have 1.3 million followers.
That is correct, yes.
Does that just blow your mind every morning?
I try and ignore it as much as possible because it's probably more of a scary thing than an exciting thing every day to know that many people are watching and listening to things that I say about money.
Absolutely. And so it's taken you to the Bank of England. It's taken you to 10 Downing Street. Has there been a moment along the journey where there was a real, you know, you can say, well, this is when it changed forever?
There's been a lot of moments along the journey that are incredibly memorable. I suppose your first viral moment on the internet is one to remember.
What was that?
My first viral moment was talking about lifetime ISAs. Quite a nice relevant topic, something that I think needs a little bit of a change, and maybe we can dive into that. But that was the first moment that I think a lot of people learnt about the ISA product, probably through social media on TikTok. It wasn't a platform built for education, but it's a platform that I've used education for. So that was a big moment. And then I guess first hate comments, being called Wallace from Wallace and Gromit. That was a lovely moment.
Where did they get that from?
No idea. And then probably a handshake with Keir Starmer is a pretty memorable one as well. I mean, some people might hate.
Bad?
I'll leave that to everyone watching.
But this, really, it's amazing how, tell us how it first started, because where you are now, the actual story of how everything started is really interesting.
Yeah, so I was working at Barclays on a graduate scheme, commercial banking, so really nothing to do with the world of personal finance. I'm not sure there are many careers that are very similar to the world of personal finance. And I, just as a weird guy, thought it would be fun to start a hobby creating financial education on the internet, because it was a topic I was passionate about. I was teaching in my own little circles. It was the thing I was reading about. And everything I know is self-taught. There's no qualifications behind it, which some people might be like, oh, okay, let's not watch this guy anymore. But for me, that adds an element of trust and authenticity behind my journey, because I'm not telling anyone what to do. I'm just teaching as I go. So yeah, I was building this up side by side while starting a career for myself. And very quickly, one overtook the other in terms of what I really wanted to do for the rest of my life, and that was to become a financial educator.
Yeah. And so how long ago was that then, when were you at Barclays?
So we're talking almost 5 years ago to the day I started. COVID, a classic COVID one. I started my career during COVID, which means I didn't meet an employee for about a year, another employee.
Wow. So yeah, you can understand why you ended up, going down the online route then.
Talking to myself and going crazy on the internet. Yeah, absolutely makes sense.
You touch on that. Your videos they go so popular and viral because it's you speaking to yourself, and it's almost like good cop, bad cop, devil on one shoulder, angel on the other. And I think that's what's so compelling about watching, because everybody's having these discussions to themselves anyway.
Yeah, it would be great, honestly, if I could bring in another human being into my studio and have a conversation with them. But until I have hired that person, I create these conversations, like you said, between two characters often. I just think it's a really engaging way to have like that look over my shoulder approach to personal finance. You have one character questioning something or not aware of a topic, and the other character can either explain it or challenge it. And this kind of dialogue does a really nice job of both giving you an end result, a lesson at the end of the day. But on top of that, it has the entertainment value, which is really important when you're trying to teach, especially a younger generation, which my demographic are, which is normally 18 to 30-year-olds.
Okay.
You kind of need to trick them into learning a little bit. So that's why I add the entertainment into it as well.
Yeah. And then you share a lot of yourself personally, because it is that real situation. We spoke about rent the other day. Oh, well. But, how do you balance that sort of vulnerability, but then also have the boundaries as well?
It's tricky. It's something that I'm learning every day. I've definitely overshared a lot about my own personal finance, whereas I suppose, opposite of that, which I also believe in, is that I like oversharing. I think that personal finance is a topic we all know it's not taught enough in any level of education.
That's it.
But on top of that, the conversations in this country in particular are so limited. It's so taboo. If you look at like levels of different topics of conversations that people are comfortable having or not comfortable having, money quite often tops that list as the most uncomfortable topic. So even though I know logically that I want to be as open as possible and be able to share anything and everything, it doesn't mean that I haven't still grown up inside of a society that closes that down. So I'm caught in that kind of two minds and two different personalities.
Yeah, but it is becoming much more the way, isn't it? We know that Mia shares her running total of her investment portfolio. Yes. Laura's got a target that she really strides towards. So I do think it's becoming more common. And how is that received? Because you do these, is it Vox Pops they're called?
Yeah, I mean, it's received brilliantly, because at the end of the day, people are so nosy. Like, they love knowing actual numbers behind what's going on.
Yeah.
So I do try and share as much of it as possible, because at the end of the day, even just sharing, a salary that you're currently earning, or you did earn a period of your life, which is often a question that you said with the Vox Pops that I ask people to try and share.
Yeah.
If you're sharing a savings amount that you've got stored away, if you're sharing a goal that you're trying to hit, when you put numbers to a topic, it starts to make things a bit more realistic, because someone else can start to see, okay, I didn't realize that, the threshold was actually quite lower than I thought, or I'm actually a bit further away than I thought. I need to maybe ramp things up a little bit. But until you bring actual numbers into it, it's very hard. So when I speak to people in the street and I push them to try and give me some numbers behind the information they're sharing with me. So like, for example, a salary, it's a 50-50 uptake whether people are comfortable sharing it or not.
Yeah.
But I think once they do, like the engagement shoots up because people are like, I didn't realize that you could earn that much in that kind of career, or that's the average salary in the UK, or someone is surviving in London earning less than 40k. How is that even possible?
I had that conversation with a young lady who was starting out in a estate agency, and I think her salary was 23,000. And I made the mistake of asking, God, how do you survive on that in London? And it was a genuine question. It didn't go down well.
No. it doesn't go down well at all. But the reason why I put that 40k number in a second ago was because when I asked most people how much do you think you need to live in London, the responses are probably start from 70 and go upwards for a single person. And I'm talking a comfortable lifestyle, of course.
That's it.
But there are numerous occasions where someone says, yeah, I'm in the mid-20s, late 20s, early 30s in terms of my salary, and this is how I do it. And to hear the start to like practical solutions and like things that they're doing to solve it doesn't mean it's easy.
No.
But it's a great eye-opener for someone that does strive to maybe move to this area of the country.
And, people generally, do you find they're striving towards investing, towards the, you help a lot of people with their ISA understanding. Is investing the goal, or are we still way off?
Investing is becoming a lot more popular. It really is, especially in young age groups. The biggest issue right now is misinformation with investing. So I think there's huge research to show that the 18 to 30 is one of the biggest ever age ranges in terms of what percentage of them are currently investing in some way, shape or form.
Yeah.
But that doesn't mean they're necessarily putting it in the right place, because the internet is flooded with misinformation. You also ask them, where are they getting that information to learn about this topic? And the answer most commonly is the internet, social media, maybe through people like myself. So whilst, yes, it is becoming hugely more popular, which I'm a huge advocate for, so are the government, with a lot of plans that they're trying to do and stuff like that, whether they work or not is another topic of conversation. And I think overall it is a good thing. The biggest issue right now is lack of access to accurate and positive information, rather than people that are trying to take advantage of this young, maybe slightly naive age group that don't have the right intentions or aren't aware of what certain tools and products should be used for.
Yeah, I mean, not to put it out there, but the Dubai crew. We've all seen the Lamborghinis and the high living, and that's the stuff that's, it's so good to see people like yourself and the ladies that I mentioned coming through, and really from a genuine educational view. That has taken you to speak to the government and the Bank of England. What kind of conversations go on at that level?
I think it's an education play still for them. Both of those organisations are obviously historical organisations. Bank of England, one of the oldest institutes in the country. The government. But they're both having this play where they realise they cannot access the young generation anymore. They are really struggling through their traditional, I suppose, assets and media. And they look at us as the new wave of being able to communicate things to, again, this younger generation.
The masses.
To the masses, exactly. I suppose the important part for us as people who have that level of authority or maybe influence on the audience that are watching us is that we're not there to be mouthpieces. We're there to digest information they're sharing with us and then translate it in our own language with our own opinions attached to it.
Absolutely.
Because I think the issue that you see with a lot of mainstream media is that they will repeat word for word, verbatim, what is being said. Now, they're doing that not because they're puppets or anything like that. That's their job, right? To report, to say what happened. But if you're watching that as an everyday person, you're probably thinking, I've got no idea what that means. I've got no idea. You're still using technical language on the news. Whereas I will come in and say, an ISA is, and actually explain what an ISA product is before I then go in to explain the changes that have been made to it. And automatically that switches someone on. So I think that if we look at the percentage again of people that are probably now aware of what an ISA product is for the first time, this is the change that we're trying to make. And I think that's what the government and the Bank of England have latched onto. They are aware that this is the change that needs to take place, because ultimately it's where the attention is.
Yeah, and it's that really nice path into investing, right? The stocks and shares ISA is it's such a nice first step, right? Don't open a stocks and shares account. Don't open a trading account until you've got that level of confidence But that can really start with the ISA, can't it?
The ISA product is amazing. Not quite sure why it's being tinkered with at the moment, or potentially tinkered with.
Well, that's interesting, isn't it? Because it's, from my point of view, what's the point in a cash ISA, right? Because investing has outperformed by so much, but it really needs people like yourself to help educate the nation on what's safe, what's not.
Well, it's exactly what you said. It's an education play. Whereas I think that the current rumours about the reduction of the allowance for the cash ISA isn't an education play. It's kind of like a force play. Yeah. And I don't think you change a nation's habits through rule changes. You change it through education. So if I'm someone that's saving through the cash ISA product, whether we think there's a use for it or not a use for it, let's say that someone is using it regardless, and they get told all of a sudden that they can't put in above a certain amount into that. I understand the logic. Don't get me wrong. I really do understand the logic, because you're shifting people. Maybe they're looking, okay, what other ISA products are. But I think psychologically, if I've got no information or education on an investing product, what I'm going to do is I'm going to shift my savings into non-tax incentivized saving accounts. And the government, okay, sure, they will raise more tax through that, because people will start to go over, the tax saving thresholds. But will you see this huge shift into the world of investing? I'm really not so sure. I think it's an education play, and it's a change in the language that's used around investing products within this country. Currently, whenever you talk about it, and again, I understand why, but it's capital at risk. Your
scary 3 words.
Your capital might go down as well as up. Risk, warning, risk, warning. Yeah. And I do appreciate why that is, because all of those statements hold true. It just doesn't do any favors to someone who's thinking, oh, maybe I'll get into it. Oh, they see that risk. You know what? Like, I don't want to take any risks. Whereas if you start to explain how to mitigate risk or reduce risk, that is a much more, I think, appropriate way to shift people over into this new world of investing.
I guess it is part of the responsibility of the companies as well, isn't it? It's saying, right, we realise that you might not have the availability of the cash ISA anymore, or greatly reduced. But if you open the stocks and shares ISA, we'll pay you the interest rate that you would have got on the cash ISA anyway. So the fact that companies are moving towards that at least softens the blow. But do you have conversations with the FCA around, but I guess they're more the regulator rather than the educator.
They are definitely the regulator, and I think they are currently working with big institutions to help, in a way, push towards the world of investing. I mean, investing has been democratized like crazy over the past decade.
Wow.
And so I think that's why there's this huge play for everyday people that can get into investing. It's not like you need to call up your broker anymore and put in an order, right? You can click on a few buttons and you've invested in any company or any fund in the world at some of the cheapest prices.
Yeah.
So the FCA are I think they are definitely working this behind the background. But in terms of working with someone like myself, I mean, you see last week the report going out about a couple of arrests in the UK on influencers,
right?
A huge number, dozens and dozens of cease and desist letters going out. And I think what they're targeting are what you call the Dubai people.
Yeah.
The people that are being flashy, trying to push people into high-risk products with very little warning and stuff like that.
Okay.
So the FCA are definitely focused more on that area of the social media world, which is good. Obviously, it's great to get bad people off the internet. What I really want, and what I'm really pushing for, is to open up conversations with this new wave of, I suppose, good players in the game, people that are really trying to impact and make a difference. And often when you do hear them talk about us, it's in a very short sentence, and they lump us in with financial advisors and qualified people. But there are this new era on social media of journalists, essentially.
Yep.
Think about someone like Martin Lewis, not a qualified financial advisor in any way, shape, or form, a financial journalist. And we're kind of in the same bracket, but I think there's that gap there. The conversation hasn't really been open between the FCA and this kind of new wave of people on social media. Yeah. And I think it would be a really useful conversation because I think we both have the same intentions.
That's it.
But we need to support each other rather than whilst keep going after the bad people, but lift up the good.
You need the clarity on where the line is.
Yeah, I mean, there's a lot of guidelines out there, and I get nowhere near to the line. I intentionally have been trained on that. I know how to do that a little bit. But there are new people that are starting up that have real good intentions that need to be taught that from the start. And I think, there's a lot of things that need to be done over, I suppose, the next couple of years because the landscape is changing so quickly.
Now, let's go back to the sort of technicalities.
Okay,
so where does the idea? Let's take an investment. Mm-hmm. Where do you get that idea from, and then how quickly does it become a video?
My ideas come from all different places. So I'm keeping an eye on the economy the whole time, little changes that I can share. Hot and trending topics often come into play,
right.
And I will try and latch an idea. But a lot of the concepts that I make come from my own real life experiences, because I'm constantly interacting with money on a hourly, secondly basis. Yeah. So a lot of these things, like from interactions with my friends, conversations with my partner, all that area hugely influences what I'm doing. Whenever I look at my investing portfolio and I make a decision or something like that, I will immediately go, well, how can I teach that within a lesson? So if we're talking about specifically investing, you know, you get around the April area, you know, ISA allowance, renews and all that kind of stuff. And it's a brilliant time to go out and create content about, well, how to invest from scratch again, you know? How to, your ISA allowance is renewing, that element of urgency, but not really urgency or panic or anything like that. Yeah. It's when people are getting more interested. Around the January area where people start to set New Year's resolutions. Yeah. And they start to think, okay, you know what? This is the year that I start investing. Again, it's a great period of time in my head where I'm like, okay, I'm resetting all of my things a little bit, my financial goals, my budgets, etc. Let me create content around that. And that's the investing side of things, I suppose, or whenever I get a question from my audience, because there's huge interaction. Social media isn't a one-way conversation, it's a two-way conversation.
Yeah, how do you keep up with all the comments?
I don't.
Yeah, it must be impossible.
I really don't. But when there's a good one, it will come through, and I will often try and respond to that comment in the most appropriate way possible. So I'm trying to think of an example. Often I'll get asked, well, what platform do you want to invest on? And my response quite often is, just start. Literally, just start. I think people overthink a lot of this stuff.
Yeah, because it can be quite intimidating.
Yeah, because when someone asks that question, the comments start to go with floods of different names. Start here, this reason, that reason, that reason. And so many platforms are suitable for so many different people for different reasons. Yeah. But I still think that it's better to get started on the wrong platform, theoretically, as long as, you know, FCA approved, FSCS protected, all that kind of stuff. Yeah. But to get started on the wrong platform, then to have that kind of procrastination that stops you from getting started full stop. Because one of the best and quickest lessons I ever learned was putting some skin in the game is the quickest way to learn.
That's it, because you're focused and you really, you soon learn your lessons on a small amount.
It's exactly how I learned, right? Put something in, something that I was willing to completely lose, so I was aware of all of the risks around it, and it forced me to start learning. And I think that's probably done more for my education than any video course book that I've ever read.
Yeah. There's a lot of our viewers, you know, mums and dads, a lot of the kids are studying for exams right now. But if you were going to say, you know, give one principle or one habit for a new beginner with even £100, what do you think is the best habit to adopt early?
Specifically with investing?
Yeah.
I think that one of the best habits is to just kind of start small. Because often people think there's a lot of reasons why people don't get into it. And one of the biggest ones is I don't earn enough or I don't have enough. But the truth is, like we said, the barriers to entry are being eroded so quickly that there isn't a huge amount that you need to start with anymore. So if I was to say, like, to build one habit, one muscle, it's just to start small, start where you're comfortable with, and then adapt and learn from there. And then I suppose if you can allow me like two, so I can do a bit of habit stacking. Go on. Once you have started with that really small amount, something insignificant that you've kind of testing out to get the feel for it, bring in the education play. I don't care where you get it from. If it's a book that you want to start reading, if you want to start watching this show every single day, if you want to go on YouTube and just start watching your favorite content creator who's talking about the topic. I think if you just do one small thing once a week, 10 minutes of your time, we speak about compound interest in investing, right?
Yeah.
The compound interest in education stacks up in exactly the same way.
That's I've never heard that before. I like that a lot.
Everything in life compounds, right?
Yeah.
So the education play is just as strong as the investing play.
Right, let's. So, how do people find you if they have enjoyed this interview? And
I like that, a big if, right? If people have enjoyed it. If you hate me, feel free to find me, hunt me down, and let me know.
Right, I'm sure we've got some comments in the. But there you go on the TikTok. So, as we said, that money guy, Gabriel. Nussbaum.
Yeah, Gabriel, that money guy. If you search that on all social media platforms, you'll find this beautiful non-Wallace looking face talking about finance in all ranges of topics and anything that interests me.
And so you must have been in early to get that title then.
Get that money guy.
Yeah.
Yeah. Someone said you should have gone with the money guy. It's too late now, isn't it?
No, like I think that's that money guy.
Well, that's where it came from. I was walking past someone and they were like, "Oh, you're that money guy on the internet, right?" And I was like, "That's got a ring."
Go on, to finish off, give us one of the funniest interactions you've had with a fan.
Oh, it's a fan or not a fan. I am horribly uncomfortable when people come up to me in the street, but I have to act very comfortable and all that kind of stuff. Yeah. But I think I was just on a plane going on holiday, and literally, like in front of me in the road, someone literally turns around and goes, "I really like your stuff." And I was like, "That's great." And then they proceed to sit next to me on a 4-hour flight, and I was just sitting there thinking they've come up to me, a stranger, saying they know me. Let's get the headphones in nice and quickly and just maybe pretend to fall asleep, because I was like, it's great when someone comes up to you and it's a quick 10-second interaction.
Yeah, of course.
4 hours is a little bit different.
Good stuff, right? Thank you so much. That's really been interesting stuff. And any big aspirations? So you've already done Keir Starmer. You've been there for Andrew Bailey.
Yeah.
What's the next?
What, DJT? The big DJT off in the US? Maybe I'll have a conversation with him one day. No, I think the goal for me would be if there was some level of formal education compulsory in the UK. None of this maths A-level enforced on kids until they're 18 or anything like that. Real financial education starting from, I don't care what age, 5, 10, 15, 20 when you leave school and university. If I saw something compulsory going into people's lives in the next half decade, I think that would be one of the biggest successes that I think I can make. Basically make me irrelevant. I'm more than happy for that to happen.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
How do hedge funds use this right now? Kind of what evidence do we have? And we have, so hedge funds that are using AI to actually trade, according to the SEC, so this is data from last year, believe they're outperforming their peers that are not by 12%. So you're taking out all of that human risk. So there's a 12% potential alpha there. That's according to the SEC. I think a lot of people are using it for risk management more than everything else.
100%.
So not necessarily just for idea generation, but dumping your portfolio into it and saying, where's my blind spots? So Deloitte ran some analysis last year, say that funds that are using AI for risk assessment have reduced their portfolio drawdowns by 15% on a year-to-year basis.
Oh, really?
15%, according to Deloitte,
massive.
Which is huge. You know, it's if you can say top to bottom, you know, I'm expecting to return 8 to 10% on my portfolio this year because of reasons A, B, C. But now instead of having a 20% drawdown, 15% to 20%, you know, you're going to now only get a 17.5% drawdown. That's material. That's material. And you're seeing this stuff happen in real time.
Yeah, and I was listening to a podcast with Nikolai Tangen, who is running the Norwegian Sovereign Wealth Fund.
Okay.
So he's managing the world's largest fund. They got a couple of cheeky trillions there. Just a few. But what he was talking about is that the one thing that they spend the most amount of time on is, first, of course, they look at sort of what stocks to buy, but they've sort of done that research already. Now they have their portfolios. They're not going to trade in and out, which is, you know, as you do, if on your ISA or whatnot, you're not trading in and out of your ISA. But what they spend the majority of the time on is risk modeling, scenario analysis. If X happens, what will happen with my portfolio? And if Y happens, et cetera, et cetera, et cetera. And that is something that, you know, these guys can use. So like you say, you input your portfolio, just copy paste it in, and you say, if the interest rates goes up to 5%, how will that happen? So you can get that sort of
these guys obviously they have the most advanced, computer systems. They have whole teams working on this. But you as a regular trader can get this into yourself as well, just inputting it correctly.
Yeah, completely. This is obviously coming out live on the Trade Live with RG show at the same time. And the question we have here is, if the EV was spun out of Tesla, what would the share price be? Is it being held back? Pop it into Perplexity, or Ronnie, have you done that?
I've done that already.
Okay, come on.
So I prompted Perplexity. If the EV business of Tesla was spun out, what would the share price be? So if Tesla's EV business was spun out as a separate entity, the estimated share price would be significantly lower than Tesla's current overall stock price, reflecting the value attributed solely to the automotive segment.
So what's it saying?
So Tesla's total market cap is approximately 1.1 trillion, with about 3.22 billion shares outstanding. So they're saying that the EV business is valued at $75 per share.
So EV $75 a share, and the stock's trading $3.45.
Exactly.
There you go.
So,
look, and that's not kind of hard, fast facts. This is IG endorsing the research, but it's fascinating that you can get that level of clarity with a simple question.
And then you might wonder, oh, where did you get this information from? Well, then it gives, Morgan Stanley breaks down their 410 price target into 5 segments, with $75 per share assigned to EV business, $160 to in-car software, $90 to robotaxi, $67 to energy storage, and $17 as to Tesla as a supplier. Boom. Question answered, mate.
Straight in there. Look, we've run through some examples here, but I think the core comparisons to hedge funds, an individual trading and investing has the benefit historically of just a search engine, or the publicly available kind of research notes, but you're going to get them way slower than the market does. They become free after, I think, a fortnight, and they find them really difficult to get hold of. So what can you now do that you weren't able to do before? Right, you can generate signals, okay? You can get ideas sent to you based on your history. Research. You can use these tools to be your research analyst, okay? No more, this is my quant. Perplexity is your quant. None of that. You can optimize your portfolio. You can monitor your movements on a daily basis. And then you can try and use it to come up with new ideas based on what you've been using.
Yeah.
It's fantastic. I mean, some of the prompts that in our research shown that obviously we use Perplexity and Claude to help us prepare for this show. A hedge fund would say something like, generate me a mean reversion strategy with the last 5 years of S&P data, and I don't want to spend any more than 10% of my transaction costs. That's a strong prompt.
Yeah.
You could say, here's my watch list, back test every time these stocks have been oversold on an RSI basis, buy 100 shares and just see how that takes you. We've already looked at how you can use it to simulate drawdowns under a 2008 style crisis or another Liberation Day scenario. Or you could say, how will my current positions perform in a 20% sell-off? And actually, how can I then hedge? So we've spoken at length on this show about using options as a diversifier. If you can figure out, this was a good one from yesterday. The person whose portfolio we were kind of using as a bit of an idea, we were asking, what do you think a portfolio is currently correlated to? So if he was using options, how would you hedge? Okay. So you could dump your positions in, you get your portfolio. What is my correlation to the FTSE 100 or the FTSE 250 or the S&P?
Yeah.
You can look at the correlation so you know exactly how much you need to hedge. Let's say you got £100,000 worth of portfolio. You might think, I'm going to go and trade a hedge. I might sell £100,000 worth of FTSE to go delta neutral. But what if you're in Barclays, in AstraZeneca, in Rio Tinto, and then you've got Alphabet and Tesla? That's your portfolio. Well, you're not really correlated to the FTSE, so it's not a clean hedge.
No, exactly.
You've got a little bit of tech in there. It's not going to be quite perfect. Get the robot to tell you what to do. Find out how correlated your positions are in real time to the market, and then work backwards to say, I need to trade gold as a diversifier, or I want to put some put options in this particular size, knowing what the delta is, knowing what your portfolio size is and the correlation.
Yeah, and you can also sort of take a step back. So, right, you're saying how the hedge funds were using it. They were using this sort of moving averages and all these other indicators to compare and contrast their portfolio. If you don't know, you can also take a step back. If you don't know which indicators to use, and you can just simply say, I want to analyze my portfolio. I want to look at risk. I want to look at sort of how it moves in relation to market volume and anything else that you might be interested in. And then you say, which indicators should I look at? And then it'll tell you, look at RSI, moving averages, etc. And then once you have that information, you then go on, okay, thank you. With the prompts with the indicators that you gave me, can you please analyze my portfolio in relation to them and model how the risk of it looks like? So what I'm trying to say here is that don't put in one prompt and say, it didn't answer my question, I'm done. You know, it's a conversation back and forth.
Yeah.
When you're speaking to your colleagues or whatnot, it's very rare that you just say one thing. I mean, obviously, when you ask me to do something, I understand it straight away. I just go straight for it. No need for me to clarify. But, you know, when you're speaking to an AI or something, it's a conversation, right? It's a dialogue and not a monologue. So work with it, make it your best friend, and it will give you all the information that you need.
Yeah, I think if we were going to give some kind of takeaways, it's start using it now, right? Yeah. This will become, and we were having debates about how this is going to impact things like education, right? Why sit a course when you can get the research at your fingertips? Like, there's a whole load of conversations you can have. Of course, we've been talking a lot on the show about NVIDIA and compute and what the demand is. Forget about that for a second.
Forget about
what can you actually do? So, you know, we're not endorsed by Perplexity, we're not endorsed by Claude or anything like this, but accounts are free.
Yep.
For both of these things. They do have pro versions where you can get access to more data. Things get ring fenced. You can be more secure with your own data. But just sign up. You know, in terms of benefits, you know, you're getting, with a little bit of inspiration, institutional grade information, quality, proactivity, because this thing is coming to you, not necessarily you having to go to it. And, you know, I genuinely think there's an edge in this. You know, I genuinely
100%.
think if we can help set up a community via this show and via this podcast where we're sharing best practices, you know, if someone comes up with an amazing prompt that's really helped them, share it with us, please. You know, jump on the chat, give us an email. You know, it's something that we are constantly using and constantly learning. Yeah, it's really changed. It's really changed the way that we work.
Yeah, and it needs, I mean, patience is the name of the game here, right? Yes, it's super quick. Yes, it's AI, it knows everything. But, I mean, you and I have been plugging away with AI tools for 2 years now, but we're still learning new stuff. We're still trying new stuff every single day. So my one piece of advice would be to be patient, learn from it, and then try to perfect everything and just continue. Like anything else in life, it takes training, because you talk about edge. Everyone is using AI nowadays. You know, everyone is using it, everyone is adopting it, but it's how you use it and how you utilize it. That's where your edge comes in.
Yeah. I think as well, you've got to look at, you know, what is your metric of success with this?
Yeah.
Right. If we're talking about, you know, giving the correct prompts, you've got to give yourself the ability to learn and get trained. You know, let's say, for example, you're a parent and you're racing around trying to look after your kids. You've got to go do the school drop off. You've got to come back. You've got to pick them up. Let's say you've never been able to keep a trading journal because you've just never had the time to.
Yeah.
With this, you know, you could in theory bring the amount of time down from keeping a trading journal from, I don't know, an hour, maybe a couple of hours a week, maybe not. You haven't even got that amount of time to do it, to seconds, because you can go onto the IG platform, you go to the history, you can download it as a CSV file, you can dump it into a Claude, and you can say, right, challenge me on XYZ. I felt nervous today when I was placing this DAX short. Why? And then it can come back to you, and it can be your psychological help as well. So you can use this as your coach. So I would say, you know, instant benefit, time saved.
Yeah.
Forget all the quality of information, but instant is time saved. Then you've got just the improved ability to make decisions. You know, if you've got your eyes wide open, and you've got Axel sat on your shoulder, instead of just saying, right, I want to be short the market because of reasons A, B, C, you could give it a screenshot of your chart setup. You can take a look at it and say, actually, there's three green candles in a row. That's not the most optimal setup, but I traded here. What would you improve? Well, wait for a pullback candle and then trade on the pullback candle. You know, maybe the entry was just not optimal, so you can get your decision making improved. And then it's risk management. You know, if you look at your portfolio and you run a scenario on it, that if the market drops by X, you know, you're going to get margin called, run that stress test through this. Because if you don't have that preparation in place now, because platforms don't do it for you, I wish we had a stress test button on the IG platform. There's a scenario backtesting piece on the Tasty platform, but not on our platform. You could go in there and you could put it in, you can stress test it. And so you know if you're over leveraged in the wrong sector, or if you are trading, say, a Palantir, that if the S&P is down 2, this is going to be down 10, right? Because of the volatility on it. Well, actually, maybe I'll take a little bit out of that stock. It's too volatile for me. I'll put it into something else.
Exactly. And I think that's really hit the nail on the head there. It's, you know, one thing that you save a lot of time in your in your trading journal, etc. However, when you write down, even if you write down, let's say you do a trading journal every day. Every trade that you do, you write in, I did this because of that, and etc. And this is how I felt. Great, you have that information, but what do you do with it? Prompting this into the AI allows the AI to give you insight and hidden nuances and analyze everything over a longer period of time.
Yeah.
And like you said earlier as well, continuously prompting it will allow it to reflect and sort of analyze the entire data over a longer period. So you can perform sort of regression analysis on your results, depending on, so when I do this, you get this result.
Yeah.
So that's what it's used for, in my opinion, to sort of get that insight that you couldn't get yourself.
You say regression analysis?
You can do a regression analysis on it.
I haven't done a regression analysis since my degree.
Oh, me neither, but
you can do it.
Yeah, exactly. Yeah. So if I sleep bad, you can do a regression analysis on your sleep to your performance that day.
Yeah.
So if sleep is -2, then performance will be, you can do a regression analysis.
I mean, this is all the finance stuff, but I mean, I've used it to analyze my diet. I've used it to analyze and create me a gym plan. I've used it to help me plan holidays and travel and tell me where I could go. If I've got a 2-week window and I want to go and travel around Europe, where could I go? The possibilities really are endless. You know, for an individual trader that is, you know, has a day job, is on the commute, you know, if you haven't got someone there being critical to you, how can you suspect that you're going to perform, you know, on a long run basis?
Yeah, that's every prompt that I do. So whenever I prompt something and ask it to analyze something, or I give an opinion, I always say sort of, don't tell me what I want to hear, tell me what I need to hear.
Yeah.
And sort of having that prompt, it allows it to sort of tell you, okay, you look at this, but you missed this section of it. Why didn't you sort of take that into consideration for the next time going forward?
I think the big point here is the applications are kind of endless, right? And I don't want to just speak in superlatives, but what we're seeing is, I don't think through the clients I've spoken to that the adoption of AI to help themselves as a trader's coach, co-pilot, portfolio manager, analyst, I just don't think people are doing it yet.
No.
Because the thing I struggle with this the most is you've been given a chatbot, right? Everybody knows ChatGPT. We purposely not talked about ChatGPT today because it's the most popular, it's the most well thought of. But Perplexity can use ChatGPT's models. It can use Anthropic's models. It can use DeepSeek, the Chinese AI. You know, it's got access to all of those different things, so it sits on top of it. But it's knowing what to do.
Exactly.
You know, I'm all for being creative and inspiration, you know, gathering inspiration, but I need to be personally inspired because I don't know what to look for if I don't know what to look for.
Exactly.
So you've been given one of our old sales coaches. He says, right, here's a badge, here's a gun, you're now the sheriff, but you don't know how to police, right? So you don't know what you don't know. So hopefully this I mean, we're going to call this like an introduction to AI, as a way to start people thinking and getting their brain moving about, oh, actually, stuff that previously wasn't accessible for me is for free, or at the very least, 95% cheaper than, you know, a Bloomberg or a Reuters terminal that supposedly the big boys use.
Yeah. Okay, Luke, I'm new to the AI game. I'm a trader. Where should I start and how should I start to get going with this?
So I'd go, if I was going to take one thing away from this, it is build a watch list would be my first point of call. That's the gateway drug, right? It is, I've read in the news about this week, the MOD defense spending review. Just this week, Keir Starmer announced that there was going to be an uptick in spending. What should I look at investing in? Right, and you maybe names like Babcock and BAE Systems, you know, they're kind of blue chip names to people that are in the markets that have done this. But if I'm completely new, I think, right, I think I've seen an opportunity here. The UK government are going to spend more money on defence. How can I benefit from that? Right, well, you know, hi Perplexity. I'm a UK investor. I want exposure to stocks that will benefit from the recent UK. Are you typing this out in real time?
Yeah.
You're typing it in real time. I want to benefit from stocks that will take some of this cash and I want to invest it in my 20,000 ISA allowance this year. How would you do it?
Okay.
So add another layer to it.
Okay. So the second question is to follow up.
Yeah. How could I allocate my £20,000 ISA allowance? Silence, please.
I have a 20k ISA allowance to allocate.
Any moment now. Magic TV.
All right. So the first question was, Keir Starmer said there would be an uptick in UK defence spending. Which FTSE companies should I add to my watch list to benefit from the increased UK defence spending?
Mm-hmm.
It gave us BAE Systems, Rolls-Royce, Babcock International, Kinetic, never heard of them.
Yep.
Serco Group, and then these are stocks that some of these I hadn't heard of. And then I said, to follow up, I have 20k ISA allowance, split it up for me. Sorry, to clarify, split up the ISA allowance in UK defense.
So you're trying to get it now to be your portfolio manager.
Exactly.
And is this Perplexity or Claude?
I'm using Perplexity.
Okay.
So it gives me BAE Systems, 7,000. Largest UK with a rationale behind it as well. So it gives me investment allocation rationale. BAE Systems, largest UK defence contract with diverse exposure to major UK and global defence programme. Strong growth potential from submarine, munitions and cyber investments. 5,000 in Rolls-Royce, key supplier of jet engines to military aircraft and naval vessels. Babcock International, 3,000, specialist in fleet management, submarine support and aerospace services. Kinetic, 1,500, provides advanced military technology services, including cybersecurity and risk evaluation. 1,500 in Serco Group, and then 2,000 in defense-focused ETF. Example given, Global X Defense Tech UCITS ETF. Any follow-up questions?
I want to wrap this up soon. Let's just say, if the FTSE fell 5%, what would the value of my portfolio change by?
Oh, that's a good one.
And of course, this is a not investment advice podcast. So do your own research. This is not us telling you to allocate to this, but it's just an example of how you can use the technology.
If the FTSE 100 index fell by 5%, the approximate value of your 20k index defense stock would drop proportionally by about 5%, assuming your portfolio moves in line with the index.
No,
that was not good.
No.
We're not happy with this.
No, not happy. We want to know the correlation. Back to the drawing board.
Yeah.
But this is the point. You know, it's not going to be gospel by any stretch of the imagination.
No, and that's what we're saying, right? Don't take the first best answer, plug it back in and back again, and then eventually you'll get the sort of answer that you're looking for. So yeah, it gives me that the correlation is roughly in the range of 0.5 to 0.7 between UK major defense stocks and the FTSE 100.
Okay, so it's less. It's if it's a correlation of less than 1, I would expect it to move by less.
Exactly. So meaning about 50 to 70% of the movement in the defense stocks aligns with the FTSE 100.
So if FTSE falls by 5, this is going to move by 4.
Exactly.
Interesting. Right. Let's wrap it up there. This is just a taste, and I think we will come back to these conversations again and again and again as we learn more. There are people in IG that are brilliant with AI. They weren't available to speak today, but we're definitely going to bring more guests in as this kind of conversation grows. But if you get any cool prompts, bring it to the community, bring it to the chat. If there are cool use cases you find, let's share this information, because I think if we bring up everybody with us, hopefully we'll all make a little bit more money along the way. Cool.
Thank you very much, mate.
Good to have you. Cheers. Thanks for coming. Guys, thank you so much. We'll see you next time. This has been Talking Shop. Please like, please subscribe, please share it with a friend if you think it's been a useful conversation. And critique us, please. If there's things that you think we should talk about, things we've missed, we probably went on a little bit too long with the demonstration at the end there, but we can learn from it. Yeah, just let us know. Thank you.